Hi, everyone. Welcome to our 5th Blockchain Legal Institute Global Summit. We are so excited to have everyone listening and watching from all around the world today. It's going to be phenomenal. So for those that don't know me, my name is Jacqueline Cooper, and I'm the CEO of the Blockchain Legal Institute, and my background is in law as well as education. And I have my co-founder with me, Matt Rogers. Matt, how are you doing today?
I'm great. Excited about another summit. We've got sort of a subject here of, consumer adoption and a thought towards the consumers. And if there was ever a time, I think, in the history of blockchain where consumers are really like right there in the middle of it, it's now. And so we're happy to be doing this. We've got, like you said, people from all over the world. I'm excited to hear from them.
Yeah, and today we have a really unique keynote. So we're going to be bringing on our keynote, Hugo Ortiz-Duban, and he is actually a former ambassador for El Salvador, and he has been involved with consulting with governments around the world on how to integrate blockchain and how to support the consumers and the education that is needed in our community. So Hugo, welcome. We met you through the European Blockchain Convention, which just was, last week. It was a phenomenal event. And we welcome you to do our keynote today.
Thank you very much, first of all. Thank you for having me here, Matthew, Jackie. And good afternoon, good morning, good evening, all the guests, colleagues, and fellow builders. It's a privilege to be here among this shaping and not just the next wave of innovation, but the frameworks of trust and governance that will define how our societies evolve in the digital age. And when we speak about blockchain and law, we are really speaking about power and trust, about who holds it, who defines it, and who it adapts when technology challenge long-standing systems of authority. And my journey, as you mentioned, Jackie, is not in the space of understanding coding or startups. I began with diplomacy, with negotiation, governance, and policymaking. And as ambassador of El Salvador to the European Union, Belgium, and Luxembourg, I served during one of the most transformative and at times, controversial periods in my country's modern history, the first presidential term of Nayib Bukele. And it was not a period, it was more than political. It was transformative because it challenged not only how government governs, but how a nation positions itself in a rapidly changing global system. When El Salvador became the first country in the world to adopt Bitcoin as legal tender, the world reacted with fascination, skepticism, and curiosity. But for me, it became a live laboratory in governance, diplomacy, and innovation. The world saw headlines, we saw lessons. And the first one was very simple: innovation without education breeds resistance. And when people, including policymakers, don't understand a technology, they default to fear. And in El Salvador, the lack of investment in education became the greatest barrier to responsible adaptation. I've seen it in Europe, and I'm seeing the same challenge, specifically with the framework like MiCA are being implemented. Yet many policymakers and business leaders still struggle to grasp what DeFi, tokenization, and digital assets truly mean in practice. And regulation without literacy is like writing laws for a language no one speaks. Across the global south, this lesson is being applied with urgency. In Kenya and Nigeria, governments links financial literacy programs with blockchain-based micro-saving platforms. In Brazil, we have a digital wallet education campaign connected to the rollout of national payment systems. These initiatives recognize that innovation only works when our citizens can understand and participate in it. And one of the second lessons that we had is that regulation must evolve and as fast as innovation. Um, Governments are structured to prevent mistakes, not to accelerate progress. And in El Salvador, we learn that pushing boundaries demands flexibility and courage and political willingness. Um, in Europe, I see the same challenges. Every breakthrough runs into fragmented rules and cautious institutions. The EU has shown global leadership through MiCA and AI Act, but innovation demands speed, experimentation, and adaptive thinking. So some of the most agile regulatory experiments are happening outside of the traditional power centers. Brazil's central bank is developing the digital real, an integrating platform that could anchor Latin America's first tokenized payment infrastructure. The Central African Republic tasted hybrid blockchain frameworks to tokenize state resources. The UAE public-private sandboxes allows rapid iteration in crypto and digital assets development. This example shows the pragmatism, not perfection, that drives the real progress. And one of the most important lessons was the narrative defines both nations and technologies. El Salvador's Bitcoin experiment was not just financial, it was about reputation. It redefines how the world saw a small developing nation, not as a follower, but as a catalyst for a broader conversation. The narrative continues to echo across the global south, where we see governments as Argentina, Colombia, Ghana, and the Philippines are studying how to adapt aspects of the Salvadorian approach, not by copying it, but by learning from it. And this emerging collaboration is what I call the South-South innovation framework, a movement where developing nations share governments, models, and regulatory experiences with each other instead of waiting for blueprints from Washington or Brussels. And, after leaving diplomacy, I realized that these barriers is faced as a policymaker and now confronting innovators and founders and investors. Government often don't understand innovators, and innovators really don't know how to talk to governments. I've been in many situations where, I have to be that facilitator. And it's not ideological, it's structural. And that's why it's very important to help startups, funds, and public institutions navigate policy, align strategy, and open important dialogue, helping innovators enter the rooms where decisions are being made, and helping policymakers see innovation not as a threat, but as an opportunity. And, going back to Europe again, is facing this crossroad. It's becoming the world's regulatory trendsetter with GDPR, MiCA, and AI Act. But, as a leader they are, there is also a paradox. Europe leads in defining the rules, but often lacks in building the products. And it has the framework, but too often capital and talent migrates elsewhere, Dubai, Singapore, just around the corner to Switzerland. And, where experimentation is not only allowed, but encouraged. And Europe's institutions have integrity and depth, but sometimes lack curiosity, the willing to test before the rule book is complete. And we see financial services in European bank cautiously experiment with the blockchain pilots, while in the United States we have traditional finance and DeFi already merging through ETFs and hybrid digital products. And as artificial intelligence and blockchain begin to converge, new questions arise. How do we ensure transparency in an algorithm governance? Can we verify decisions on chain? Can citizens audit digital power structures? These are no technical issues. It's about democratization. And Europe has strong institutions and institutional tradition, and it has the opportunity to lead it again. But it needs to choose collaboration over control. And It's not only to listen to the big powers. Now is important also to listen what is Sao Paulo doing, what is Nairobi doing, what is San Salvador, because innovation no longer flows in one direction. The global south is not a follower. It's becoming a laboratory for the world, from the blockchain based land registers in Ghana to the digital identity system for farmers in India to the tokenized remittances corridor in Central America. And emerging markets are producing real world applications that make technology tangible for millions. This is not abstract pilots. There are working solutions to urgent problems like financial inclusion, transparency, and efficiency. And this is the future of governance will depend on how we will connect these ecosystems. Governments themselves don't innovate, people within government do, and our responsibility is to empower those individuals to understand the complexity and bring clarity, and to design strategies that makes collaboration both possible and productive. And when I'm looked back into my journey from the diplomatic political bubble in Brussels to this evolving world of decentralized governance, I see one constant truth, and that is that every transformation begins as an anomaly. It starts as something misunderstood, uncomfortable, or even ridiculated until it becomes the new norm. And that's our task today, not to resist the future, but to normalize it, to turn what once seems radical into the new common sense, and to gather transformation with wisdom, inclusion, and courage, because the future will not wait for governments to catch up, and innovation will not slow down for those who hesitate. It's up to us, the connectors, the translators, and the builders, to ensure that progress and policy move forward together.
So much wisdom and so much truth, and definitely a wonderful keynote that starts off 5 panels with individuals from around the world talking about the what we've seen in the past and lessons learned. We want to thank you for coming on, and I know you will be part of many other conversations that we have. So thank you so much, and we will be bringing on right now Lani Dizon, who is part of the Rio Digital ecosystem and world. She is the president and co-founder of a global network that is supporting creating cryptocurrency for the masses and educating those who might not have a knowledge about what the technology is and where it's going. Lani, how are you today?
I'm doing wonderful. Thank you so much for having me. It's an honor to be here. And I also want to thank you, Jackie and Matt and the BLI team, for creating this valuable global summit. It's very important, and all of us at Rio Digital are very proud to co-host and be your strategic partner.
And we are as well very excited. Now we have 5 panels, and for those that might be looking at the panels or listening to them, they're going to see a common thread, because there is someone from the team, the Rio Digital team, on each panel, because of everything that Rio is doing in all these different spaces. So do you want to kind of give an overview?
I do, yes. So I first want to mention, though, that for all of us that are participating in this summit, blockchain and digital transformation are part of our everyday conversations, and we're really passionate about it, right? But for most people, that's not the case, because they don't see the vision that we have, and they don't care much about blockchain or protocols. They really care about daily life. Is their money safe? Is their identity protected? How to make life easier and better for their families? And usually technology helps, right? But technology makes things simpler. But if you think about it, we have been using all the services, credit cards, phones, apps, Uber Eats, Instacart, DoorDash. We use these things all the time, and they bring convenience, but we don't have to understand how it all works. We just basically use them. But when dealing with crypto, people get intimidated. The scams, the lost funds, the complicated wallets, it all feels out of reach. So people are very skeptical, and we've all felt this complication getting into the space. But that's the reason why events like this and taking real action towards bringing crypto to the consumers is so important. Crypto still hasn't reached most people. Bitcoin is over 15 years old, but only 1 to 4% of people globally own it. And even after tens of thousands more coins have been created since, only 6.8% of those of people worldwide owns any crypto at all. So, and the real world usage, it's less than 1% of global retail spending. So as we all know, Web3 is meant to move people, but these numbers validate that we're still very far from reaching that goal for the masses. And that's the reason why I co-founded the Rio Project 7 years ago. The name Rio comes from Japan's original gold currency, the gold Rio of the 1500s, which later evolved into the Japanese yen. And it once unified the nation, and we revived it for the digital age, but not just as a coin. But as a complete consumer first ecosystem that's designed to feel simple, trustworthy, and made for everyday life. And what it does is it brings together Rio Coin, which is the core digital asset, Rio Pay, which is our stable coin for seamless transactions, a simple digital life wallet that goes beyond crypto, Japan's first and only FSA crypto ATM network that enables real cash in and out, and a global mall that connects merchants and consumers through e-commerce and crypto payments. Plus, we build in AI on top of all of that. So this unified ecosystem is built to be accessible, secure, and useful for everyone. And we built this project from Japan, one of the most respected and strictly regulated markets in the world, known for its high standards in innovation, transparency, and consumer protection. And that's why we chose Japan, because the values of trust, stability, and integrity mirror the foundation that we're building on. And it is 1 a.m. here, 1:17 a.m. here in Japan. And we'll be here throughout the whole summit, but we do have members, and we're really proud to be here. But we're all here still at the office, the people that are participating, and we have our members that are part of the project that are joining in with other great leaders across the 5 panels, and they're each going to be contributing to their insights on how blockchain, digital assets, and innovation can be inclusive for consumers and create real world impact. So that's what we're really passionate about. And so for everyone that's listening and joining in, thank you for being here. And I'll hand this back over to Jackie.
Yeah, no, we really appreciate your being here. I know that this is live stream now. It will be recorded, so those can also take a learn on all the different topics that we're sharing. So Alani, right now we're going to have you exit. We're going to take a short minute to bring on our first panel. We will see you on one of the other panels, and we're excited to share everything that Rio is doing within the global community, because you're laying a foundation and you're showing how it can be done ethically and responsibly with the eyesight as to what helps consumers. So thank you for being here and being part of our strategic partnership. Everyone, stay tuned. Panel 1 is about to come on.
Welcome, everybody. That was a pretty exciting first two talks we've heard. I'm pretty inspired, so let's keep it going.
For sure, for sure. So today we have our first panel, and our moderator actually is someone that we've known for a while. Um, and I don't know if there is someone which has one of our streaming going on in the background because I can hear. Uh, thank you, I can hear that. But Tatiana Turgo is a managing partner and global legal strategist for De Facto Agency, and she's, in addition to being an entrepreneur in the legal area, and she is a strategist herself doing things around the world. I'm going to let you introduce yourself with some of the projects, and then you will introduce everyone who's on the panels. Please take 30 seconds to introduce yourself. We have a diverse group of individuals here, so I'm really excited to start the conversation about consumer protection in the digital asset landscape. So Tatiana, I'm going to let you start.
Hello, everyone, and welcome to Panel 1. I am Tatiana Turgot, Managing Partner at De Facto Agency and co-founder of The Factory, a legal tech platform that bridges technology and law with a focus on consumer protection and consumers can be immigrants too. As digital assets continue to move toward mainstream adoption, we find ourselves in a fascinating and sometimes risky frontier. From crypto exchanges to DeFi to NFTs, millions of new users are engaging daily. But alongside with innovation, we are also seeing an increase in scams, hacks, and regulatory uncertainty. So our question today is, how do we protect and empower consumers in the digital asset economy without jeopardizing innovation? I'm joining by an outstanding panel of leaders who bring global and multidisciplinary perspective to this challenge. So let's dive right in. Robert, over to you. Robert, as an expert in crypto investigations, you've seen both the brilliance and the pitfalls of decentralized finance. My question to you today is, can you explain the importance of the role of self-custody and the trends you observe related to decentralized security measures and protections?
Yeah, thank you very much. That's kind of a long-winded question and answer, so I don't know if I can do it any justice in just a few minutes, but I'll try. So you think about the concept of no intermediaries and self-custody. So the whole blockchain foundation, Satoshi's dream, if you will, when he wrote the white paper, was to have no intermediaries and people taking care of their own assets. Own your keys, have your keys, that's your crypto. If you don't have it, it's not your crypto. And what we see is today, we see a not very even split. We see most people keeping their crypto on exchanges or other centralized locations, and someone else is managing their keys. But we do have a population that's a more technical user that is managing their own keys and their own devices, like a Trezor device or something like that. And that is working well. And that is within the essence of what Satoshi's dream was, and the crypto dream was back 14, 15 years ago, right? In 2008 and 9. Now, as we transitioned into that period, this period over the last 15 years, is we've seen a whole I'm not going to call it a generation, a whole period of time, a couple of years, where if you lost your keys and you had to basically self-custody, if you lost your keys, you lost your crypto. And those people who kept their money on exchanges or kept their crypto on exchanges, sometimes were exposed to hacks like the Mt. Gox incident, and then hacks like happened to Bitphoenix back in those early days in 2016, 2015. Very big hacks for the time, and a lot of people lost a lot of money. As we move forward, we had technologies caused a problem, and then technology started solving a problem, and we saw hardware wallets come out with more usability and have a much larger audience that could use their tools through not only just the seed phrase itself to recover a wallet, but then BIP39, which allowed not only that particular device to be recovered, but any device running that protocol can be recovered through a seed phrase now. So we've seen technology that caused a problem with the wallets not being very useful to now they're very, very useful, but still a lot of people are intimidated. and to keep their own custody and stuff. And I think one of the things that we got to talk about when we talk about, and I'm just going to stick with Bitcoin right now because layer 2 is a whole different issue. But when we talk about layer 1s and Bitcoin, you got to think to yourself, how many Bitcoins are out there that have been lost forever that no one will ever get a hold of? So, and that's going to go towards supply and demand at the end of the day. 18 million Bitcoins being produced virtually over until 2140. That number is probably right around 16 million or less. And that's going to make the crunch to own Bitcoin in several years when, Tatiana, like you said, only a small portion of the world owns Bitcoin right now. And we're going to see this crunch pretty soon of everyone wanting to buy Bitcoin if we haven't already started to see it. And 16 million Bitcoins won't go that far. So we'll be talking about Bitcoin in the matter of Satoshis before you know it. And you know, we'll be moving forward with not only centralized exchanges, but decentralized as well, and self-custody, holding your own keys and holding them well so you don't lose your crypto. That's what it comes down to. And hopefully technology will make it even easier as we move forward.
Thank you, Robert. And I want to add that Robert is a cryptocurrency investigations expert and advisor at Merkle Science.
Thank you.
My next question is to Siron. Siron, your work with Olos Foundation tackles decentralized governance and open innovation. How do we...
Sorry, it's a decentralized media protocol, but that's fine.
My question is, how do we balance innovation with consumer protection?
Sure. Just to introduce myself first, CEO of the Olos Foundation. We're building a decentralized media platform, which aims to be the first truly ownerless media platform since the dawn of the printing press. We're replacing, because it's open and decentralized and permissionless, we have to replace centralized powers of editorial and peer review with the crowd. So we're using quite novel mechanisms for that as well. And then we're also going all in on a public goods funding mechanism, or in common parlance, tipping on the internet. So that's kind of what we're doing. To answer your question, look, a lot of the stuff, Robert just touched on this as well, because of the way crypto has fallen. A lot of people don't self-custody currently, and we're probably still a while away from that. So for that reason, a lot of protections are brought to us by laws that already existed. In the finance and other worlds, you know, AML, if you're marketing something for financial gain, you're always supposed to state the risks, et cetera, et cetera. There are fraud protections applied to anything, doesn't matter the asset class, you know. And then I guess, and something that hasn't really happened as of yet, that is probably going to happen soon, certainly the US are talking about it. Generally, if you're an exchange, you're supposed to not have customers' assets. So it's a segregation of custodians and exchanges, and you're not supposed to be able to trade against your own customers. And that hasn't really happened yet. So that's one area you can say, I guess, the centralized legal system for crypto probably needs to catch up to the rest of TradFi. Then the other area, which is far more contentious, is kind of the world I'm in, which is if you're building decentralized applications or decentralized protocols, should you be submitting to some sort of regulatory program? There's been a lot of voices saying people like me should have to register as brokers or exchanges, which is ridiculous. You know, the whole promise of blockchain technology is that this permissionless innovation, you can build all these cool financial tools that are just the current financial system is too slow to provide. And the reason you're supposed to be able to do that is because you're not, unlike traditional finance, because of the nature of decentralized applications, you're not actually able to screw over your customers. You don't control this thing once you release it onto a blockchain. But there's a huge caveat to that. Your users mightn't understand code, and most of them won't. So if you've introduced a bug intentionally or even unintentionally, people will lose money. So where we have at the moment, certainly with MiCA in Europe, and it looks like the US is going this way as well, there is a complete hands-off. People like me won't have to be regulated in any way. And I think that is right for now. It's still in finance terms, it's a big industry, but in finance terms, it's still quite small. So it's probably the right regime for where we're at now. But moving forward, I wouldn't be surprised to see some sort of middle ground between really heavy traditional financial regulation and maybe some sort of thing like governments, regulators will whitelist certain smart contracts. And to get that whitelist, you might have to submit your code before you launch it. So they can say it's doing exactly what you advertise on your website. And then they can police that maybe with the hardware layer. They can say, Apple, don't allow any wallets for this smart contract, interact with these smart contracts that aren't whitelisted. That's one possible future avenue. Another one is, it's just true that hacks are happening less and less, and smart contract issues are happening less and less. The industry is learning, and a lot of code gets reused. So it is, through painful experiences, strengthening in itself. So it's possible that won't even be needed. I guess time will tell. And then I guess another thing to consider is, and Robert brought this up as well, you always have to protect users against themselves, not just yourself, not just you, the app creator. If people lose their private key, that's could be their life savings gone. And I don't think that's a feasible scenario for some system that's going to become the underpinning of global finance. So we're going to have to start instigating stuff like social recovery or multi-sig, where even if you want to send 100,000 of your own money, you set up a rule where somebody else has to sign off on this as well. Somebody trusted, somebody regulated possibly. Stuff like this, just to protect you against yourself being defrauded or just losing your private keys. So that's my thoughts on that question.
Thank you, Siren. That was an insightful look at responsible innovation. Now let's hear from a regulatory perspective, my favorite one. Alexandra, this one's for you. Regulation often struggles to keep pace with new technologies, but progress is being made. My question to you, Alexandra, is how are regulators addressing frauds and scams?
Well, that's an interesting one. We do have an increase in regulations, and to confirm what Kieran said earlier, MiCA 2.0 will include regulation of DeFi. I was just in a conversation with some European regulators and the original drafter of MiCA and DORA yesterday. And that is definitely something they are planning on looking at, and it will definitely be a lighter regime than the MiCA that I was applying to casts like the one I work for, uHodler. But when it comes to fraud, we see some seizures, like in law enforcement network of illegal crypto ATMs in the UK. We're seeing law enforcement actions taking place in crypto, but actually a lot of the fraud has been illegal for 200 years. There's not new laws being introduced when, FTX, what happened there has been illegal for 200 years. This isn't corporate governance fraud, misrepresentation. These are all covered by existing laws. Regulators aren't sitting there having to invent new regulations. And in a way, the industry moves so fast that the new typologies, we're still trying to explain to policymakers the fundamentals of blockchain without starting to introduce these fast, rapidly evolving fraud typologies. Where a lot of the anti-fraud is coming from is actually industry itself. Because no one wants to cover those losses. B, just if you want to build trust in the system and have people come and invest, you can't have this fraudulent climate. So we're seeing efforts like chain abuse, like the Beacon network, exchanges coming together, educational platforms, where the one place I will say there is a sort of crackdown on anti-fraud, and it's less anti-fraud so much as misinformation, is we are seeing crackdowns on financial promotions, especially in the UK in particular, cracking down on influencers and saying you are covered under financial promotions law. It does count if you're saying this on Instagram, and you do have a duty of care to the consumer. So that is where we see a lot of enforcement, and that's less fraud. Well, in some cases it may be fraudulent actual misrepresentation, but in a lot of cases that would just be essentially negligent messaging. But a lot of the efforts are actually coming from within the industry, from firms like Merkle Science, from and TRM and Lipnic, every big anti-fraud solution. They're all running huge events, giving away knowledge of typologies. You know, they're not hoarding this knowledge, which is something you can respect them for, because they're trying to educate everyone on the risks. Because, as I said, it's evolving so rapidly. I tell a story that sometimes I was transaction monitoring and I saw a carding scheme that I'd not seen before, and I looked it up. I wasn't sure what it was. Turned out to be a carding website that had been shut down because basically the founder of the carding website had gone on a kids these days don't want to do fraud properly, and they're not doing their own homework, and they're just getting AI to make their fraud for them, or they're just buying it offline, ready-made scam. And it was like proper kids these days don't want to put in the work. It was just more amusing because it was kids these days don't want to do their own crime properly. I'm sick of this. I'm shutting down the website. There's no talent in today's young criminals. But that's what it is. The thing is, it's so automated. It's so easily available now that almost anyone can do it. And that's why we're not really seeing it from the regulator so much as it has to be the people on the front lines. It has to be law enforcement. It has to be anti-fraud software providers. It has to be the exchanges themselves. And I would say because of the lack of trust in the industry and because of early hacks and early scams, people are really stepping up. Industry players who want the respect and the trust of consumers. But yeah, critically, a lot of the information sharing is coming from firms who are working in this sector, and they're giving away their analyses. As soon as a hack comes, everyone gives away their research into the streams. As soon as there's a new scam like pig butchering, we're all sharing information of how this is happening. There's a lot of roundtables, there's a lot of conferences, there's a lot of working groups, all trying to work out and like chase these, frankly, innovative young scammers. I mean, I guess the Carter wasn't right, or maybe he was right that they were lazy, but they're certainly developing things faster than any of us can, one person could keep track of, let alone an institution like our legislators and regulators, because that's moving around the Titanic. That's not turning around a speedboat.
All right. Thank you, Alexandra. Alexandra Lloyd, LLM, Head of ML at Yohodler, expert in fintech regulation and consumer protection. Thank you again, Alexandra. You have highlighted how regulation can build trust rather than restrict it. Now let's turn to where policy meets practice, the exchange level. Hiroshi from CoinHub has earned a reputation for its commitment to transparency and safety. And my question to you is, how do you see safety measures being implemented in crypto markets, and how are consumer rights being managed?
Thank you. Okay, a brief introduction for myself. I'm Hiroshi Uehara, Rep Director and President of CoinHub. It's a Japanese exchange, FSA licensed, and we are also the first class member of JVCEA, Japan Virtual and Crypto Asset Exchange Association. It's half government, half private organization. The FSA is SEC of Japan, and FSA has chosen some exchanges to join to create new regulations. That JVCEA is, and this model is, I think, unique, and I don't think US is the same way or any other country adopt the same way. My fellow exchanges are such as Binance and Coinbase Japan, such exchanges. Anyhow, so regarding on the question from exchange perspective, we have adopted using the cold wallet. It's mandated now to manage the cryptocurrency asset held on behalf of customers. So that's now standard in Japan. However, since we are all expert on this subject matter, I like to go deeper on this discussion, just to have fun. So I like to point out something. According to the chain analysis research, criminal use of cryptocurrency account less than 1%. Cash has a higher rate of criminal use. Securities banks deals much higher rate of financial crimes. So are we overregulating? That's a big question I kept having with the regulators since 2 years ago. For example, if my exchange issue a paper wallet, $100 worth of paper wallet or Bitcoin, it will get 10,000 yen worth of paper wallet. 10,000, that's equivalent to US $100. So I'm just going to say $100 worth. Paper wallet to the customers, and if he or she, and this paper wallet is completely non-custodial, my exchange doesn't control anything inside, or no access, nothing. Everything you manage. If you lose a paper wallet, can you go to Bank of Japan or Federal Reserve Bank of US and say, can you reissue me a $100 bill because I lost it? You can't. Furthermore, according to our research, our side of I'm just speaking inside of Japan. More than 80% of account is less than $1,000. So over majority of account holders, crypto account holders in Japan, at least in Japan, less than $3,000 transaction, which we don't have to do KYC, AML. For example, if you go to the bank, you want to withdraw $1,000, do they do KYC? Do they do AML check on you? No, they don't. So where we are right now is a rigorous KYC requirement, even for minor transactions, stringent standard not imposed on traditional financial institutions such as bank. So cash is better, gentlemen, gentle ladies. The crypto is so much harder to use. Where are we going? Was the question. This conversation started 2 years ago. Oh, by the way, I work for the CoinHub is a part of your project. So Ms. Manid is on keynote speaker of this meeting today. So we had a discussion with the regulator, and Ms. Dizon suggested something brilliant. Why don't we try something? So we started out. There was a money. It's backed by gold, I guess, and there's a gold certificate, and then the government certificate, and somewhere along the way there was an ATM where people could go to the ATM and draw cash or deposit cash from an ATM machine. So we are setting up. This is on Yahoo News on the CoinDesk. We are setting up ATM of the first kind, crypto ATM of the first kind, no KYC, no AML. Anyone can go deposit or cash crypto from ATM. In other words, we are trying to stick to the speaker of the first of this panel mentioned about the original vision by Satoshi, and that it was peer-to-peer transaction. It was so we wanted to do that, and 2 years ago, I went to FSA and said, "This is what we want to do: ATM, no KYC, no AML." And and we are doing it. That's the reason why we are on the news, Yahoo News, CoinDesk, everywhere in Japan. That it's one of the biggest news on crypto space. What we are doing, what we're trying to do, we are trying to in a sense we are trying to create what it's supposed to be, the crypto is supposed to be, and we're doing it. So other I wanted to point out other the current regulation in terms of the crypto current regulation. We came to the point it is unable to freely manage your own asset if you have in crypto, how to handle emergency situations, all travel rules and all kind of rules prevent you to transact freely. And by the way, anonymity was a key feature of cryptocurrency when it was created, but it's all gone. By us over-regulating on this field, in fact, we are centralizing it, breaking the decentralization feature of the cryptocurrencies.
Thank
So,
you, Hiroshi.
yeah,
Okay.
I'm sorry. Yes.
Because we are starting running out of time.
Go ahead. Yes, thank you.
Thank you, Hiroshi. That was very interesting. You have shown how leadership within exchanges can shape global trust standards. Now let's bring all these threads together. My open question to everyone is what are some of the best practices available for educating consumers about digital asset risks and benefits? Who is willing to answer? Please. Robert.
Yeah, thanks, Tatiana. So I do a lot of training in the space. I visit a lot of law enforcement agencies. I've visited, HSI, DEA, FBI, all of them, and worldwide as well. I've been training around the world for many years now in the crypto space. It really comes down to not just teaching what the end goal is, but teaching the basics and how we got to where we are, starting with Bitcoin 101. Read the white paper. Number one, you got to understand the foundational principles of what was sought after when this whole market became a space, and you really need to then take a look at what the first Genesis block says in there. This is a movement that was supposed to be decentralized, and it was supposed to take out intermediaries like banks. That was the first words ever issued to the blockchain was about the chancellor and banks. So when it comes down to training, you need to stick with the fundamentals and then move from there into not just the layer ones like Bitcoins and UTXOs, but then you need to move to layer twos and how protocols work and what each one of these protocols is bringing to the market. The market moves very fast. You have to stay on this game all the time. You really have to be reading all the time about what's going on and talking with people, and certainly staying abreast. Otherwise, you will find yourself in a couple of weeks or maybe a year not understanding what's going on anymore. It's very fast.
Right. Thank you, Robert. And another question is how the use of Bitcoin or blockchains can be used for protecting public records from threats like AI. That's an important and interesting question. Who is willing to answer?
I can take a stab if you want it. I guess the way I interpreted it was that public records might be corrupted, if I'm correct. Bitcoin or other blockchains can be useful in that you can create a hash to connect to any data, so then you'll at least know if that hash no longer matches the data wherever it exists, it was tampered with, which is useful, but because you can't put the entire file or whatever it may be on blockchains. They're obviously not designed for that, and they can't hold that type of data. But there are dedicated file storage, decentralized file storage platforms, Filecoin, Saya, Arweave, ICP to a certain extent, that you can actually upload entire databases, ledgers, books, whatever you want to call it, of public records. And they can be there in an extremely tamper-proof, even censorship-resistant, if you pay enough money for it, setting. So that's certainly one way. And then you could even, like, if you run the AI models themselves on decentralized infrastructure, if they're open source, so you know their outputs are exactly as said. So that is the great promise of decentralized infrastructure. It's essentially trust infrastructure, and it can certainly help in a huge way.
Thank you very much. That was an interesting answer to an important question. If anyone has something to add to this, you are welcome, please.
Well, Sarah, and I think I'll follow up and just ask you this because you may have a thought about it. What's quantum computing going to bring to the security of the blockchain?
It will bring a disaster to those blockchains that haven't updated their cryptography to post-quantum proof cryptography. Look, it's an elephant in the room, but it's an elephant everyone's aware of.
Yeah,
and everyone's moving. Yeah, so everyone's moving to get ahead of it. Obviously, very topical question considering yesterday's huge breakthrough. So I guess a sense of urgency may have taken hold after that, but no, totally fair point. But I guess it's something everyone's very much aware of.
Yeah, that's why I asked it. I heard yesterday's news and I said, that's interesting. It's coming, right?
Oh, without a doubt. Yeah.
Thank you.
So I want to hop in here. I appreciate everyone. Tatiana, I want you to explain a little bit more about your project, because you haven't had a chance to really share what you've been working on since you've been moderating, asking everyone else questions. And I think it's important because we're talking about consumer protection in all different levels, and you work with immigrants and other individuals. And so can you share a little bit more in the minutes that we have left on this panel?
Right. Thank you for this opportunity, Jackie. I'm originally an immigration lawyer. And I do global immigration, and not only Sweden, or I also do some other countries. And my idea was, because I saw a lot of gaps in my daily legal practice. So also in terms of consumer protection, because immigrants, as I mentioned initially, are also consumers. So we have to consider that. So at the factory, we are building AI-powered and blockchain-secured legal tools for immigration law firms and global mobility teams. And we use technology to advance consumer protection through transparency, accountability, and smart compliance. And the goal is very simple: to prove that innovation and consumer safety can and should move hand in hand. And that was actually the topic of today's discussion. So thank you for giving me this opportunity to talk also about my project, which I'm very proud of. And thank you for letting me introduce myself and be a moderator of this global summit. And for me, it's a very good experience. Thank you, Jackie.
Not a problem. So also, I want to mention to everyone who's watching or listening, all the individuals who are panelists today on this panel, as well as others, they all are doing remarkable work within our community. So there are going to be links and additional videos that do deep dives into what they're doing, so because I've interviewed almost everyone on these panels, and we've talked for 30 minutes in depth on the various projects. So definitely what you're experiencing here is just, small tidbits of the topics that obviously can go into a lot more depth. So if everyone on this panel was to leave consumers with maybe one or two tips that they need to take away as they either step into this journey or continue on the journey of learning about digital assets, what tidbits would you give them? What 1 or 2 tips? We'll start with anyone can hop in.
I'll fire ahead. If you are ever interacting with any smart contract on the blockchain, find out who the team is behind it, see how long they've been around, see how many times that contract has been used, battle tested, before committing any funds that would upset you if you lost. I think that's the main piece of advice I'd give.
Great advice. Who's next?
Yeah, I think the 2 things I would say is if it sounds too good to be true, it's probably too good to be true. Don't go down that road. And this one may sound a little corny, but always send a test transaction first.
Mm-hmm. Yeah. Who's next?
Hi, Jackie. Okay. I want to. I just want to make leave a little comment at this end. I'm a regulator's perspective. I'm regulating every day, but I just wanted to caution the everyone that this is good innovation. This may be right now everyone is suffering super high inflation, but if you think about the Austrian economy, it's about to collapse anyway. 80 years it's a lifespan. So we are seeing the end of this Austrian economy experiment that globally we engaged since the Great Depression the last time. I believe cryptocurrency is the answer. Otherwise, anyhow, not to be said more, but so this concern about the privacy, we should be very worried about the privacy invasion concern. To regulating this too much, it's already harder to use than cash. And I just a little bit mentioned about. Don't we all have in the Bible somewhere? Don't we all have this regulated money that no one can transact, the number of the beast or whatever? So we should be worried about a privacy invasion concern more than over-regulating. So that's just my end note. Thank you.
Tatiana, what about you?
All right. A lot of noise. I don't know why.
That's okay. What are your last tip?
Yes, I just want to say that technology, education, and regulation, they move together to create a crypto marketplace that's both dynamic and safe. And I would not distinguish separately technology, education, and regulation, but I would say it all together. That's what creates an adequate consumer protection within this space.
Thank you, everyone, for being on our first panel. And I know that we are going to have continuing conversations with all of you. So I'm going to ask you to off stage, and we are going to have our second panel come on board, which is going to be talking more about the evolution of cryptocurrency, stablecoins, and the other tokens within our system. Thank you so much.
Thank you.
At the Rio Project, simplicity drives usability. Buy, send, and receive crypto using its chat feature. Instantly, securely, anywhere. Shop online with crypto or your cards, all on one seamless, user-friendly platform. Japan's first licensed crypto ATM network. Buy or sell crypto instantly using cash. And let's not forget the ecosystem's stablecoin, RioPay. In the future, you'll be able to easily exchange Rio Coin for RioPay, which eliminates price volatility for purchasing goods, services, and other real-world assets. The world's first next-generation AI-powered meme token to protect and manage your digital assets. Welcome to Rio's digital payment ecosystem. Crypto made simple.
Can you guys hear me or see me?
We can, and we are live. So thank you so much, everyone, for being on. This is our panel 2, and we have some others.
Hello.
We can hear you. So panel 2 is all about crypto payments, stablecoins, and everyday use. And we have on right now Cameron Diaz, we have Jack, we have Eric. Eric, how are you doing today? Eric, can you hear us? And this is a live stage. Can you hear us right now?
I was stuck for the last 20 minutes.
Fine. Eric will come back on. In the meantime, what I'm going to do is everyone who is on right now, thank you so much. Why don't you go ahead and do a quick introduction of who you are and your background for about 30 seconds. So Cameron, I'm going to ask you to kind of share a little bit about your background while we have Eric join the stage.
Awesome. My name is Cameron Brown, founder and partner at Darn Advisors. It's a Web3 blockchain-focused tax advisory practice here in the States. Been working in this arena since 2017, launched the practice back in 2021, and doing anything from compliance, walking through tax advisory, planning, on-chain DeFi, all the fun stuff. Keep my clients out of jail and on good sides of the IRS and other tax agencies.
So Eric, welcome. We're going to hop back over to you in a quick second. Jack, why don't you share a little bit about your background and where you're from and what you do?
Yes, hello everyone. Good evening from Denmark, here sitting in Scandinavia. Very happy to be here, Jackie, and hey everyone. I used to go kind of by the name Bitcoin Jack because I was so early on in Bitcoin. Back in 2013, I saw Bitcoin. And then 2015, I lived 1 month only on Bitcoin, which is kind of regretful about these days. I would say it's a lot of money to spend on taxi rides and tattoos. But anywho, it got me the nickname Bitcoin Jack. And around that time, I really started showing an interest in stable coins. Now, back then we called it digital cash, programmable money, smart money, because the term stable coins was not really coined yet. But around that time in 2017, I started the company Arise with the mission of making dumb money smart. Everybody in my echo chamber was building smart money. You know, after Bitcoin came Litecoin, then came the hundreds of ICOs, and then, well, the rest is history, right? But while everyone else wanted to create smart money, we wanted to make dumb money smarter. Like, we didn't really care if people were interested in dealing with euro or dollar or gold or camels or whatever IOU they wanted to utilize. We thought, let's just tokenize it and make like a crypto IOU of that promise. That led to a whole endeavor for me. And for the past decade, I guess, I've been involved with stable coins. Arise, we are really good at creating them, managing stable coins, and utilizing them to make very, very efficient payments across, well, traditional finance, decentralized finance, and centralized finance. So yeah, we make dumb money smart at Arise.
And thank you so much. Lawrence, why don't you go ahead and share a little bit more about yourself and how you've stepped into this space?
Yeah, so I'm a CTO and co-founder of Edelunum. So we just did our TGE yesterday, token generation event, after 4 years of working on the product through all the bear market and everything else. So yesterday was a big day for us at Edelunum. And yeah, so I'm actually a computer scientist and economist, which is kind of a weird mix. But I was a core developer on the TCP/IP protocol. Myself and Dr. Richard Stevens, if anybody knows about TCP/IP, but that's TCP/IP is the reason we're able to actually do this video call right now. So it was the foundation of the global internet. And then I was the co-founder and CTO of Travelocity, which was the very first, not Expedia, but the first travel website. So the day before we launched that product, there was only two ways to buy travel. You either call the airline or hotel or whoever directly, or you went to a travel agent. The next day, March the 12th of 1996, we had potentially 15 million internet users in the United States that could log on to Travelocity and see flights for themselves and that kind of thing. So that basically was a kind of a generational event for me. And then I went on to found some other companies. Heard some people in the background talking about buying Bitcoin around 2017, and I'm friends of mine, and I'm like, you're it's a Ponzi scheme. I don't know what you're even thinking about. So I was I was joking around, like, and then I serendipitously I went to a conference in Slovenia, uh, in Marlborough, Slovenia, up near Austrian border, middle of nowhere. And people from all over the world were there. It turned out it was a blockchain conference, and I'm like, I better start investigating this. So I went through using my computer science skills, my cryptography skills. Spent 6 months going through the whole Bitcoin protocol, and so I was blown away. It was a bigger invention than TCP/IP. From a monetary perspective, without TCP/IP, it wouldn't exist. But yeah. So then I was all in, and since then I've done projects in DeFi. I've built 2 launch pads, ICO launch pads, IDO launch pads. Been involved in the community work of developing communities that are able to participate in that. And yesterday was the third one actually with Adlunum we just launched. So it's a new take on it, and getting the right investors to the right projects and things like that. So that's my background. Yeah.
Awesome. And Eric, welcome. I'm going to wait a second before I hop back over to you, because I'm going to reintroduce and go back over to Lonnie. Lonnie, welcome back to this panel. I know that you're going to be sharing more about the ecosystem within the Rio coin. So how are you doing?
Oh, I'm doing well. I'll give you a little bit of my background. I actually started in nutrition, skincare, and wellness 32 years ago, creating my own brands and other OEM products. But wellness, skincare, nutrition, and entrepreneurial platforms. And these platforms helped people to live healthier lives from physically, mentally, and financially. And we grew large communities of consumers and entrepreneurs all over the world, from Japan, Hong Kong, Singapore, Thailand, Malaysia, all over. And the hub was in Tokyo. And that's how I started 30 years ago. But when I discovered Bitcoin in 2012, I was really inspired. And wellness is still my passion, and we still do it. In fact, our teams here at Rio, they all take our nutrition products and they love them. So we want to keep them healthy. But my mission to help people is still the same. It's just evolved with a broader reach through the Rio project, which I co-founded. And so, trying to, I'm just really happy to be part of, this space now, because I think that it's really time for mass adoption.
I agree. There's a lot of work to be done. So, Eric, welcome back 3 times is a charm. So Eric Guthrie, I've known him for a number of years. He's also a fellow attorney with Cogent Law Group. We both are partners there. And he's also a fellow author, and he's written a number of really insightful books. And I know his latest book either just came out or is about to come out. But Eric, we're going to have you start asking the questions for our panel, and then we'll be able to learn more about your book as well right after. So which panelists would you like to start?
I'm going to start with Jack.
Okay.
And so Jack, good to meet you. The question I have for you, for the audience, is how can stablecoins reshape, or how are they reshaping financial transactions?
There are so many ways that can be answered. So I will try to do my best, because for me, stablecoins, it's not a fully crystallized concept yet, right? There are various iterations of stablecoins, and if you've been in crypto for long enough, you've seen a lot of those variants fail, right? Like Luna and UST, and well, I'm not gonna jump down that rabbit hole, right? So when we say stablecoin, it's not like saying Bitcoin. Bitcoin is kind of crystallized. It's a thing. We all kind of know what that thing is. But with stable coins, it's so abstract, right? It's like it's a sector, an industry almost. And then there are various ways of utilizing like the technologies in Web3 to create stable coins as like to solve a problem. So we know the big ones with Tether and with Circle, and that's kind of the traditional stablecoin recipe: US treasuries and then a token with a dollar value. But stablecoins are blossoming into its potential. And for the past maybe 10 years in crypto, I've been dealing with programmable money in multiple ways: micro payments for online media, or smart contracts where you basically did auto donations. You could donate money to a solar panel and it would turn on like a top-up card if there was money on the solar panel, to kind of crowdfund micro housing systems. And I believe this was Kenya, in an early project we did back in Denmark. And all of these projects and all of the ones since then, I would classify as being under the stablecoin umbrella, but they are having an impact in so many different ways, right? So the simple one is the banking the unbanked, right? It's pretty damn hard getting a bank account, but it's quite easy downloading a crypto wallet and start selling stuff online, right? So that's already enabling the world to interact with digital economies, which I believe when I started my crypto endeavors, they said that 60% of the world's adults were underbanked and unbanked. Now, these people, these segments have an alternative in these technologies and stablecoins, but that's just the beginning, right? So you're banked now, but then all of a sudden, going from being kind of banked or having financial access to being supreme, like to having better access than a Danish guy in Copenhagen. And what I mean by that, well, I still pay $10 or 10 euros to do a trade on a regular stock platform where if I want to invest in Amazon shares, right? Just alone logging in as a cost. I have to be banked. I have to have my ID. I have to pay the percentages. But on the other side of the world, you got a 12-year-old boy who is staking and swapping and yielding and buying gold and doing liquid farming, and he's doing all kinds of stuff that for us is maybe not financial inclusion, but well, for him it's food on the table, right? So stable coins are having a similar impact as to the impact envisioned by Satoshi when writing the Bitcoin white paper. It is a trickle-down effect. It is helping in so many ways and shapes and sizes. And of course, it is then being taken over to a certain degree by the same people who run the world already, right? So there is a reason why the world and TradFi is so pro crypto and pro stablecoin, and that's not because they suddenly love the anarchistic ideology behind Bitcoin. No, it's I'll be careful how I iterate myself. Bitcoin, I don't want to call it a Ponzi scheme. I've been in the game since the beginning, but hey, man, if it's not a Ponzi scheme, it's a long con, right? So there is a reason for these centralized enterprises being so involved in cryptocurrencies and stablecoins. So let's not conclude what crypto is or what a stablecoin is, because it's abstract. It is an expression it's a terminology for a series of technologies that work in unison to optimize payments, to optimize ownership, to basically move settlements from T+3 to T+0, to moving auditing to becoming a real-time endeavor. Right? So all of these small breakthroughs accumulate to quite of an important paradigm shift in global economies, and the stable coins play a massive component of that. It is the familiar bridge that we can use to speak with the robots money, right? With smart money, right? Because when we do automated trade finance and escrow services with smart contracts and a solar panel generating power to sell back to a self-driving car all automatically, that whole shebang, we're not involved in that. We as humans, that's robot money. Stable coins is our interface to the new reality of smart money. That would be my kind of way of trying to iterate that, I think, Eric.
Thank you, Jack. A lot to unpack there. We didn't have time to unpack everything, but I'm going to unpack a bit and take it to our next question. So you mentioned a 12-year-old boy using a stablecoin for, basically being able to put food on the table for his household, et cetera, right? That is, to me, the epitome of user adoption, right? When a preteen or a teen can use a blockchain or cryptocurrency, the user interface, the user adoption is so simple that a preteen or teen can use it. We've really gotten to a place where we're really getting to global adoption. So here's my question. I'm teeing up for you, Cameron. What is the impact on crypto payments on merchants and consumers, which would also include being adopted more globally, in the commerce and the personal and the financial stages?
It's all been negative. There's nothing good to talk about here. End of question. Next. No. But with regards, but no, I mean, I've been around since 2017, and kind of the first iteration of payments and platforms, and heck, even when we launched our firm to accept payments from some of our clients, was we used something like BitPay, Coinbase Commerce, and that was it. Which made accounting fun because we're not collecting the data in the right fashion. We had to build the treasury behind it. You receive the funds. What the heck do you do with it? And then we saw a bit more kind of graduation from that with kind of, say, more specific platforms, Request.Finance, one of our clients, Actual, where you can actually direct invoices. It's tracked behind. It syncs back into your ledger. So the accounting got a bit better. But still on the individual basis, it was very much P2P. Or I want to pay a small firm. Do they have a Bitcoin wallet? Are they set up? Can they off-ramp? I have these funds, I have this capital, but I can't actually put it to go to work. So I've been very excited as of late, with the rise of like these debit cards, whether it's Zappo, Gemini now has one, Coinbase has their card, where from the merchant side of things, it doesn't matter. It's backed by Visa, by MasterCard, whatever that be, but the actual funds behind it can be USDC, USDT, ETH, Bitcoin, Argentine pesos, dollars, doesn't matter because it functionally converts into it. So overall, kind of the rise for, I would say, for having cryptocurrency payments for merchants, I would say at the end of the day, the idealistic of like, yeah, I'm going to pay you with my Ledger wallet or send a transaction, send it here, that's kind of gone by the wayside. We see a bit more account abstraction, EOAs and types of place where folks can pay, but it doesn't really feel like the native crypto experience. So, I mean, that's something that, for example, at our firm, we have contractors based in Argentina. We know how great the Argentine peso is and holds value, unfortunately, but they prefer to get paid in stablecoins. So we'll send them USDC. They can off-ramp that to a debit card of their control. That automatically converts at the shop or the vendor. So from the actual consumer aspect, I'm not bearing the brunt of FX risk in my home country. I can hold something a bit more stable than pesos, rand, whatever that be. But function spending as if it was the entire time. The downside of this, speaking as an accountant, is I don't feel a lot of the, at least for smaller businesses, ourselves included, the infrastructure to adopt this hasn't really caught up. There's this idealistic like P2P, payments, debit cards, etc. We run an accounting firm. Our proposal software, our contracts, our actual off-ramping is credit card, ACH. That's it. So the inclusion for small businesses, professional service providers, etc., to adopt, to receive crypto is fairly lagging in that regard. So we have to use other softwares to grab it. It doesn't play right with our accountancy software. It doesn't sync. We're tracking, and there's a bit more of a mental burden. But in the spirit of trying to encourage adoption, we happily want to accept it, or just dead drop us some USDC on our wallets. On the flip side as well is because now that we're living in this fungible, capital gain or loss. USDC is not 1-to-1 to a dollar, it's 0.999999998. Those don't sync directly into your NetSuite QBO 0. The downside of this from the merchant side of things, it almost forces you into additional software. So we're looking at, a Cryptio, an Integral, something else that actually tracks your wallets, tracks your exchanges, tracks your transfers back and forth. So just the very fact of adopting it is kind of cumbersome at times. So I hope things get there. But good news in that respect is I've seen quite a few platforms out there that try to be like a one-stop shop when it comes to treasury for the on-chain native business, where they can invoice in stable coins, they can receive payment in stable coins, it has a profit loss built within it, they can track their vendors, their customers, etc. Doesn't even sync to QBO and 0. So there's been kind of this tug and pull back and forth. Overall quite optimistic, but I think with the greatest use case so far to date from the merchant side of things is just, here's my debit card, it's plastic, it's metal, it's on my phone, it's funded by my crypto, and the vendor or merchant doesn't have to know any different.
So, Cameron, thank you. That's another excellent rendition of what's happening with stablecoins here. And the point that I want to point out that you raised is, stablecoins do provide some benefits to vendors. I mean, for example, it may be cheaper to use that than to use credit cards, and you may get your money back faster, because you don't have the same type of centralized, authorization process and et cetera, from whichever bank or whatever credit card company coming back to you. But to your point, if you were to download all this stuff and incorporate all this stuff into it on the front end, that's a big turnoff, right? Now, I'm going to pivot to Lawrence. I'm going to unpack this for you, Lawrence. Now, when you go to a store and use a credit card, basically you have 5 options: Visa, MasterCard, American Express, Discover, maybe Diners Club, right? But you have way many stable coins than you have credit cards that are, that we're using globally on a regular basis. So how do we overcome those barriers? How do we overcome barriers to mainstream adoption for crypto payments?
Well, I mean, so first thing I will say is, when the foundation of all this is through Satoshi's work with blockchain. And I'd like to say at in his original design that he never intended for that protocol, for somebody to be able to use that protocol to buy coffee, okay? Because the block time will always be 10 minutes. There's no getting around it, right? So that's the way that is. And same thing with, it's going to be the same thing with other protocols. Some of them are faster, some of them are not faster, but they're not Visa and they're not MasterCard, right? So these companies have clearing houses where everything's instantaneous, right? So there's like layers and layers of things going on in the background that you don't know about. So in reality, looking at it from a first principle perspective, in computer science, if you look at it, when you log on to your iPhone or your Windows or your Mac, whatever, when that window pops up and your email pops up, there's thousands upon tens of thousands of layers of software that you never know about, that all drill down to one little electronic blip on a circuit. And all of those things amalgamated up into those thousands of different levels of abstraction equal that Windows you're in there interfacing with, and it's transparent to you, right? You don't know the difference. Well, that's exactly the way it's going to be with global crypto payments, right? So, the first thing that they tried to come up, the Lightning Network and all of these different payment facilities, which I'm sorry, I love those guys, and it was the first stab at it, but it's, I don't know how any reasonable, normal person, I mean, my wife, we would be here for a millennium until she understood how to use it. So that's never going to happen. She knows how to use her MasterCard at Saks Fifth Avenue, right? So that's just not going to happen. So these layers of software are going to have to develop, whether it's stable coins, whether it's Bitcoin itself. There's no reason why that can't be used as a payment, but the reason it can't right now is because the block. Now, if you're buying a $150,000 car and you're going to sit there at the dealership and wait 10 minutes, it's irrelevant, right? But you're not going to do that with coffee. And so these layers of software have to be developed, and we're at our first stab of it, pretty much, like with the Lightning Network, and there's a whole bunch of others for Bitcoin that I can't remember now at this point. But so all of those layers of software need to be developed so that a consumer can actually use them. So that's what has to happen, and that's going to happen. I shouldn't say that's going to happen. It's good, just transparently, because who's facilitating most of the payments in the world today? It's Visa and MasterCard, right? So it's, I've been getting paid in stable coins since 2018, but not, we're a very small percentage of the world. So they're gonna help adopt this, and it's gonna come through them. It's not coming through, and yes, there's a benefit to a peer-to-peer without the commissions that MasterCard is charging the merchants, which you never see, but they're going to work all that out. But you still have to walk up to the vendor and present a card in some way, and there has to be some, and all that's going to come through layers of software that have yet to be developed. Everybody's working on it. It's going to happen. So that's what's going to happen.
That's great. Thank you, Lawrence. And to unpack that a little bit, when you mentioned the layers of software, I feel like, for the past 5 years, the industry has focused on making it easier to invest in cryptocurrency. Back when I started, it was Coinbase wasn't even around, and when it was around, it was just one crypto, Bitcoin. That was it. It was a big deal when Ethereum came up on number 2 and OneCoin number 3. So what I had to do to start was very complicated. Fast forward a few years later, and I'm writing books and talking about it, and my wife is in the bed one night, and she's like, my Ethereum and my what's the other one she bought, Dogecoin, are doing really well. And I was like, when the heck did you buy Ethereum and Dogecoin? She said, I went into Robinhood. It was on Robinhood, and I just, I've been listening to your talks, and I read one chapter of your book, and I bought Ethereum and Dogecoin. I thought to myself, now that is user adoption and user interface, because she did it without even really paying attention to what I did, more than tangentially, but she was able to invest. I think the next stage is bringing it to this whole crypto payment thing, where we have consumers and vendors and other folks able to do it much easier than they could do it right now. So that being said, Lonnie, you're up. Now, as a successful entrepreneur in the business industry, in the beauty industry, which is, I'm sure, a multi-billion-dollar industry, right? There's a lot of real money to be made there. If someone could take this technology and take the finance and the movement of wallets and everything around it to your industry and make it, such that it's a cornerstone of how you guys transact business and, transact cryptocurrencies, whether it's a stable coin or not. So how do you do that? How do you factor in the security? How do you factor in the usability, the user interface? Please preach to us. Let us hear it.
Yeah. So, first, one thing I want to mention is, the challenge in mass adoption, right? I wanted to address that challenge first, then roll into your question. But, if we step back, and because, I always think from a user perspective, from the rest of the population. Like I said, we here, we're into AI, we're into crypto and Web3, but 93% of the population is not at that stage yet. And so I'm always looking from that standpoint. And I think that has really helped us to build this real project and this real ecosystem. The challenge, if we step back and we look from a wider view, let's look at Web 1, Web 2, and 3. With Web 1, people couldn't imagine how the internet could help their lives, right? We had fax, we had pagers, and most people thought that was enough, right? And then Hotmail and AOL came along and Facebook, and they made it easy. That's when the shift happened. Then we moved to Web 2, and then that's when we got the convenience and the connection, but then we lost privacy and ownership. Then in Web 3, it's about putting power back in people's hands. And that's what I love. And although we talk about mass adoption, the truth is most people still don't even know what Web3 is. They don't even know the term Web3 or how it's going to help them. So it's almost like back at Web 1 in terms of adoption. Why are we going in reverse? You know, um, Even when people try to learn, it's like a maze. There's volatility, the jargon, the complicated wallets. It's overwhelming. And so people feel like they need to be crypto experts in order to use it. I know it's different for you, Eric, because your wife, she built up the confidence, and she in you in order to buy that crypto. But the majority of the world that I know, that most people outside of this project that I know do not know how to buy crypto. And they're just so confused about it. They don't want to learn the technology. They just want something that works almost instantly and conveniently. And that's the barrier. It's not just volatility or security. Most people haven't even made it that far. They stopped at the front door of crypto. And what's holding people back is not really just logic, it's emotion. It's the fear of losing money, making a mistake, not knowing who to trust, not getting it. And so, what we did at Rio is we took a different approach. And instead of asking, how do we teach people to use crypto? We asked, how do we make crypto usable without needing to understand it? And that has been our focus from day one. And with that, we have built a multi-generation community across Japan, built through education, teaching them what Bitcoin, crypto is, Web3, and breaking it down to them so that they can understand. And this community that we built is from the age 20s students all the way up to seniors in their 80s. And now they believe blockchain can empower their lives. And it's made a difference with them. So, and a lot of the seniors are so happy because they're part of their children's future generations. But for everyday users, we designed the Rio ecosystem to feel familiar. And with my background in wellness, I understand the user experience, how people feel when using a product. That determines whether they're going to trust it or they're going to adopt it. And a lot of these people that, this big community that we built here in Japan that are, followers of our Rio project, about a third of those people came from our wellness industry. And so what happened was we had tried to onboard them, or I should say onboard them into crypto, because we wanted to start using Bitcoin and other cryptos. This is before the Rio project. We wanted to start using crypto as a payment method, and it was just so complicated. And so what we did is the first part of the ecosystem is our Life Wallet. It's a digital life wallet that goes beyond crypto, because we don't want people to feel like they're using crypto. This life wallet works like a simple multi-feature messaging app. And so people can chat and send crypto at the same time. We use email addresses for sending through chat. They can manage their assets, they can check market rates, and they can connect with their favorite social media platforms and websites all in one place. So that this is what this Life Wallet does, is that's why we call it the Life Wallet, because you can do everything in your day through this wallet. And what it does is it integrates with our global mall, and our global mall unites merchants and consumers and service providers into this global mall, where we've got thousands of merchants that are already ready, and we're going to be launching this soon, but we've got thousands of merchants from selling vegetables, everyday items, clothing, just even the smaller items. They're going to be on this global mall. And so the Life Wallet connects with that. And then the Life Wallet also connects with our licensed crypto ATMs. And so we are the first and only licensed crypto ATM network in Japan. There are 0 ATMs here. So, and we're rolling these out across Japan so that users can easily cash in and cash out. And what's unique about these ATMs is that it's not just like the ATMs that you guys see, right? Like in America at a gas station. These ATMs, yes, it's an ATM, but at the same time, it's an entry point to this ecosystem that then connects to the global mall, to the Life Wallet, and to other parts of the ecosystem. And with these ATMs in Japan, users can easily cash in and they can cash out. They're bi-directional. And in this Life Wallet, we're also adding AI guidance with our mascot to help users, with their experience. And soon our stablecoin RioPay will support real world trade, starting with grain payments between Japan and Canada with our grain trade partners, and then followed by other industries. Our goal is to help these farmers, for example, through Canadian grain overseas, to simplify and expedite the way they get paid. So we want to make an impact on these people. Then everything that we built has been centered around trust. It's been developed under Japan's strict regulatory standards, and they demand transparency, they demand consumer protection. That's number one, because and as you guys know, regulation and trust, it gives innovation legitimacy, both to governments and to users. And of course, we're not the only ones that are pushing adoption. So many more projects are coming, and recognizing that it's essential. But we have to reach simplicity. We have to reach real world utility and easy onboarding for the 93% of the world. And that's what our mission is here at Rio, is focusing on people first, real world use for everyone, from parents, grandparents, farmers, merchants, and everyday consumers. And I think that until we reach that point where they can feel like, or they can understand what the benefits, and they can feel like it's a simple user experience, mass adoption is still going to be out of reach. So that's what we did is in the global mall, looks like a regular mall. The Life Wallet looks like a social platform where you chat with each other. So yeah, that was our strategy. And we have the following in the community in Japan to prove that these people are very excited about what we're doing and being involved in this space.
Lonnie, that's fantastic. And there's two things that you said that I want to point out before I do a quick lightning round with all the other panelists. One, you mentioned your app. And I've always preached to my clients, the ones that are developing blockchain products, if this is supposed to be B2C, even some B2B, you're going to need an app. There has to be some type of ease and user interface and user adoption. And right now, we're so used to that, it's hard to not do it, right? So you really do have to have an app to really be impactful in a space. It's number one. Number two, you mentioned partnering with merchants and businesses and with consumers. And that's super critical. There's so many times that so many clients are trying to build something to just hit the grassroots and hope that life springs eternal and then people adopt it. But that isn't the case anymore. I even argue with the folks that I represent that it's a three-legged stool. Yeah, it had to have the industries, the consumers, and the government all in at the same time. Because the absence of any one of those three, your project can fail. Right?
Exactly. It's like a tripod. You need a balance.
You do, absolutely. So, Jackie, how much time do we have? I have one more question. I want to do a lightning round.
We have about 5 minutes before our next, so say 4 because we have the transition in and out. But that's the lightning round is needed because, if you take a look at who our panelists are, we have the accounting side, we have the token creator side in terms of stablecoins, we have Lawrence, who's been, both in the tech as well as in the business consulting side, and Lonnie as well. So we have such a diverse group. So do the lightning round. Let's see what comes out.
See, we were friends for a long time. That's exactly what I was thinking. Here's my question that really picked up what you just said. Each one of you have such unique expertise in your own industries related to crypto, stablecoins, blockchain. So here we go. From your perspective, what would have to happen, or when would you, here it goes. When would you know that adoption is successful? And that means that in your industry, that so many people are using it, so many billions are being transacted that you can say, you know what, this is not working. I'm going to start with you, Jack.
We're not gonna know when it's there. It's like do people know about magnetism when they swipe a credit card, or do they know about NFC when they're tapping their phone or their card? People don't know, and I what I'm sensing from others in the panel as well as also from Lani is that it's about shielding people from the technicalities of using technologies. Right? If my mom is to understand zeros and ones before she's allowed to swipe a credit card, nobody would make payments. So, and also the step then going from the magnet strip to the chip, that was kind of all of a sudden we don't swipe anymore, we just tap. But it's still the card, it's still the format, but now it's in the phone. So magnetism led to the thing, which led to the thing, which led to the thing. And so we are already in that. We're already using cryptography. We're already using the encryption standards of these blockchains in several ways. And so it's a work in progress that all of a sudden is like, aha, it's there, because who else is like moving like briefcases of cash anymore, right? So it's just going to be an all of a sudden thing, but it's gradually happening. It's already there to some degree, and then it changes, right? What Satoshi said about Bitcoin, or wrote about Bitcoin and the plans of Bitcoin, and then the execution 10 years, whatever has happened, it's not like set in stone. These things are changing, and stable coins might change, and the crypto might change, and hopefully we're all a part of that change, and we don't forget why we started in the first place. Being in this Web3 industry, again, like Lani touched upon a lot of the things that she values and really resonated with me. So I think that we're a part of that change. And I read somewhere that 9 out of 10 central banks are discussing CBDCs, and whatever big portion of the top tier banks are in crypto in some way, shape, and form. Kind of like, what more do you want, right? It's there. It's happening, and more every day, I would say.
Thank you, Jack. Cameron, 45 seconds.
Ooh, I think when we know we're there is that when my mom feels comfortable being a 65-year-old Midwestern lady, self-custody crypto. So having her own wallet, have it downloaded, be able to transact, play in my world. I know we've made it. We're a long way there in that regard. So we'll get her there.
That's a great analogy. I use the preteen teen analogy, but I'm neglecting the senior analogy. So I'm really glad you brought that out. Lawrence, 45 seconds.
Yeah, I'd say when 95% of the people that you talk to understand it or are using it, versus right now, probably less than 5% of the people you talk to are using it and understand it.
Great. Lonnie, bring us home.
Yeah. So, I really think that it's when, like you said, the 93%, when we get to that, when people are going to be able to use it without thinking about it, where payment really just becomes invisible. They think about it anymore. And I think that once, like one of the things that we're building with our Life Wallet is, you know, with the QR code too, is you're going to be able to just go to merchants and tap and pay just like that with crypto. And I think that when we get to that point, when people can use it without thinking about the technology, without the complexity, and the grandma could use it, grandpa could use it, and you talk to somebody and there's not the, you know, very difficult technical words, I think that is when we're going to be able to get to mass adoption. And I think that, you know, with this ecosystem that we created, with the mall, people being able to shop and actually use it, being able to have that Life Wallet, being able to have a physical ATM to cash in and cash out. I think all of those things are, once that is adopted, that's when we're going to get there.
All right, Eric, you take it home. And then we are going to go to the next panel.
Well, so first of all, I think you're all right. So, because I think each perspective has a lot of merit, right? I believe that we will know that it is successful when, and this is kind of incorporating what all of you just said, right? Is that when it becomes something that we do without thinking, right? And we don't even have to, we don't wonder right now whether Visa or MasterCard has user adoption. We just know it does because it's everywhere, right? So that's kind of what Jack was saying. It's like, can you really measure it? You just know that it's happening, right? From my perspective, I'll know when it's successful whenever I talk to someone about crypto and they say, I just don't understand it. That's the first thing they say, right? And then you have to say, okay, well, here's how it works. But when we get to the point, and I was around with the first iteration of the internet, people didn't understand that either back in the day, right? Now, everyone's got a website. Everyone's got 5 social media pages, and everyone is on 24/7, using the thumbs, talking to Siri or what have you. It's everywhere, right? It's going to take time. I think it's probably about another 5 to 10 year horizon, but that adoption in terms of mass adoption globally is going to be at the point where everyone gets using it without thinking about it. Yes. Jackie, over to you.
So, yeah, again, this is just a tip of the iceberg. My last thought on this, and then we are going to go to the next panel, is what everyone has said. It's education. Education, not just for adults, but education at the school level. So the vocabulary can start coming early on, and that'll be a whole nother topic. But everyone, thank you so much for being on. I know I'm going to have conversations with all of you at different points. And for everyone who's listening also, there'll be everyone's live link below, so that way you can make connections with everyone. Thank you for being on, and we're going to our next panel.
Thank you all.
Welcome to a new era of digital assets. Freer, safer, and within your reach. Send and receive with ease, even with just an email. Simple, fast, and seamless. Stay connected to what matters. Access your favorite social media, shopping, news, and more, all in Life Wallet. Your assets, your control. Protected with powerful security you can trust. Life Wallet, connecting your digital assets and bringing a new experience into your hands. Download the app today on the App Store.
Hi, everyone. This is our panel 3, and it's all about blockchain and digital assets for wealth building. And we've already had 2 very interesting panels about cryptocurrency and whether, you know, mass adoption and everything else that goes with that. We have a really diverse, again, panel of experts here. So, RK, I'm going to let you introduce yourself. You are a phenomenon that people just don't understand. You're based in Qatar, and you are our moderator for today. And you are in AI, in law, in technology, in business consulting, and the list goes on. I'm going to let you explain more about your background, and then we're going to introduce our guests, and we're going to start.
Perfect. Thank you. Thanks, Jackie, for the quick handover. I'm RK. I'm based out in Qatar. Currently doing my Doctor of Philosophy in Law and AI through Paris University. Been in IT services industry for the last 25 plus years and contributing to the research and research papers and engineering services in artificial intelligence and blockchain for the last 5 to 10 years. Have written a couple of papers, uh, presented in lots of conferences on blockchain across domains like life science, banking, legal technology, pharmaceutical, telecom, etc. So that's a quick short note about me. I will hand it over to the rest of the panel members to get introduced themselves. Can I have Ian getting introduced? Ian, over to you.
Hello, I'm Ian Taylor. So just a bit of background. Back in 2016, I was a professor at the University of Notre Dame, having spent the last 25 years in research, published 200 papers, 13,000 citations, all that good stuff. And I got led astray by blockchain. So I initially did a project with DARPA, secure messaging using a blockchain architecture, Simba. That's where the company name comes from. We launched Simba in 2017. And since then, we've focused on data tokenization, working for the Air Force mainly, and doing other commercialization efforts. But it's all about kind of the data behind the token and the tokens as well as just the kind of forefront. So next person.
Okay, thank you. Rudy, over to you for a quick introduction.
Good day. My name is Rudy Gutsia. I'm based in Amsterdam currently, and I'm working for a company in Dubai, Freedex. I've got about 30 years experience in IT, and 21 is focused on security. So anything from pen testing, risk management, GRC, you name it. And yeah, over to you.
Perfect, thank you. Luis, can we have a quick round of introduction?
Good day, everyone. My name is Luis Sirico. I'm the Chief Technology Officer for Fluidify. We provide digital asset solutions for banks, lawyers, and law enforcement agencies. My background is I'm former FBI, DOD, 30 plus years working in technology, and I've got multiple patents in AI and blockchain, and yeah, a little bit about me. It's an honor to be here.
Thank you, Luis. Butch, can we have a round of introduction from you? Butch Takoka.
Hello?
Can we have a quick note of introduction from your end?
Oh, hi. Sorry. Sure. Sorry, it was breaking up a little bit. Hi, my name is Butch Takoka. I'm the Chief Financial Analyst here at Zenz Capital in the Real Digital Project. Brief background. My background is in international banking. Used to work at Goldman Sachs, Nomura, Lehman Brothers. I was born in Japan, grew up in the US, not permanently living here. Very excited about our project and also very excited to be here. So thank you very much. My first blockchain legal BLI Summit event. So again, thank you.
Okay, pleasure to have you today, Butch. Before we start off with the panel, a pleasant good afternoon to everyone, and welcome to this pivotal session at Blockchain Legal Summit 2025, or as I like to call it, where crypto meets compliance, and no one is sure if their lawyers are accepting Bitcoin yet. As you all know, we are witnessing the evolution of digital finance. One thing is getting increasingly clear. Consumers are no longer just curious about digital assets. They are actively integrating them into their strategies for wealth building and long-term retirement planning. Be it from Bitcoin to tokenized securities, the lines between decentralized innovation, it is continuing to blur, but bringing both remarkable opportunities and complex risk as well. Today's panel, consumers and digital assets, risk, rewards, and the road ahead. We are going to deep dive into this very intersection where we are going to explore how digital assets are shaping modern financials and what that means for regulation, technology, and investor protection. Luckily, we are not going to do it alone. We have assembled a panel of experts who not only speak fluent blockchain, but can actually explain it without making your brain melt. To help us navigate this, we had the panel Ian Taylor, Louis Sirico, Rudy Coetzee, and Butch Takoka. With all these diversified experts, let's try to decode the risk, explore the rewards, and maybe even predict the future, how we plan and protect our financial lives in a digital first world. Let's dive in. Let's directly jump into the questions for each one of you. Ian, the first question is to you. How do you think the tokenization is opening up new investment opportunities for retail customers?
Hi, can you hear me okay? Good. Okay, great. Yeah, so I think start by, for the audience, what is tokenization? So tokenization is the process of converting real-world assets into blockchain tokens. So you have ownership, and that ownership might be of the whole token. It might be part of the token, but it establishes that. So if you think about, where fungible tokens maybe convert dollars into stable coins, non-fungible tokens can represent assets using data tokenization in such a way that it can open up new opportunities for non-institutional, aka retail investors. So some of the examples maybe in the space are fractional ownership. So instead of buying the $10 million mansion, you can buy kind of 1,000th of that and invest in that opportunity without having to commit so much capital. The other example, I think, is access to new asset classes. So, for example, other classes that haven't been prominent in the past, like access to art, private equity, fine collectibles, and so forth. There again, you can kind of look at that in a fractional concept or a whole concept. So circling back, so why do people care about this, right? Why does it matter? So Bain & Company, who I had the pleasure of meeting in New York a couple of weeks ago, they estimate that tokenization could be up to 400 billion revenue. And other people like the National Law Review, just quoting here, they see it reaching $30 trillion in the next decade. So this is quite an interesting kind of growth if we can obtain that. I know the last panel talked about how we obtain that growth. So it's a combination of those two things, right, coming together. And just lastly, I just wanted to say about how Simba fits into this. So there's a token on chain, which we use NFTs specifically, but behind that token is a whole wealth of data. So, for example, we layer things on top. So we provide decentralized permissioning to that data behind the token. We provide visibility into the token, so we convert the token and the various files behind it. Perhaps, we convert that, how the files relate to each other so people can understand what the data is. And we can even go into the files and extract that using kind of schema so we can connect all of that data together so they can search the data that's behind the token. So, some of the things that we use it personally, we use it for supply chain. For example, we bring in data from OEMs and tier one suppliers into the Air Force. And, we take, sub-tier suppliers and lead times and, production schedules and risks, and we bring all that together to tokenize that data so we know it hasn't been changed, and then we transact that into a way that it can be used. But think about that in a more kind of general concept. What we're doing is packaging data into packets, right, that self-represent themselves. And that could lead to itself to many ways of, providing permissioning layer to assets that you might want to purchase. So you might want to buy a data packet because it's valuable data for your particular application. So that's another form of tokenization, I would say. So we've also tokenized things like coffee production. So we're providing, and the purpose there is to not to generate revenue for the retail investor, but to reduce their costs. So, we managed a 6x decrease in costs and therefore a 6x increase in the farmers, which meant that more farmers could produce the coffee to satisfy the customers. And the last one is CO2. So we're working with partners now that we're looking at analyzing the data from the source where there's, carbon reduction programs, like, there's utilities that can take the carbon in and reduce by 70%, for example. Carbon Sponge is one of the people we work with. So we're recording the data at that source and providing the data lineage behind an NFT, which can be transferred off to somebody that sells that as a carbon credit on a marketplace. But they have full visibility into what that data means, where it came from, full provenance right back to the source of that data. So they're actually real credits as opposed to some of those in the past that haven't turned out to be that way. Does that make sense?
Perfect. Thank you, Ian. I think there has been a lot of tokenization feedbacks and a lot of diversified implementations we could hear for the last few minutes. Many thanks for your insights. Next question is to Louis. With such a strong background in decentralized finance, Louis, what do you think should consumers and businesses be aware of when navigating taxes, regulations, and risk in crypto investing?
Thank you, RK. So first, as Hugo said during the keynote and Jackie just said during the last panel, educate yourself. You're watching here, so obviously you've already started. Now, I'm honored to be a technical expert on digital assets and tokenization for Bloomberg Law, and we've published multiple articles on these topics. And I only have a couple minutes to answer this question, but I will offer, please, reach out to me through Jackie, through BLI. I'm happy to share these articles. A subscription to Bloomberg Law is really expensive, but I can share copies of those articles at no cost for education purposes. Just ask me. So diving deeper into education, you do want to understand the crypto laws and regulations governing the jurisdiction that you're living in and your business is operating in. That's really, really important. Just like you need to understand tax laws for yourself, you want to understand the crypto laws, okay? Third, like any other investment, do your due diligence. Carefully consider the tokens that you are going to purchase and invest in. Look at the team behind it, etc. Do your due diligence. Really, really important. So, as many of the other speakers have mentioned here today, there are a lot of different products and platforms that facilitate the buying, selling, and reporting of cryptocurrencies and digital assets. But specific to investing in taxes, everyone must have a complete accounting of the tokens and the token balances that you have invested in as of a reporting date, like December 31st of the previous year. So what we've seen over and over being in this industry for 5 years now is the biggest gotcha really comes not necessarily in the reporting, but when an audit or a third-party review of your financials or of your personal financials occurs. So for businesses, hopefully you're following IFRS, the International Financial Reporting Standards, or GAAP, which is the generally accepted accounting procedures. And if you're following these, that's great. You've got to do that, but that's also going to apply to your crypto as well, all right? And so the biggest problems we see is on your financials, you're reporting the fiat value. Rather, if you're in the US, that means you're reporting in US dollars. If you're in Canada, you're reporting in Canadian dollars. If you're in the EU, in euros. So you have token balances, but you have to convert them to fiat balances at the time of the report. And we've seen this so many times when the pricing provider, the third parties that are saying this is the value of that token at this date and time, somebody goes and they get this number, they put that number on your financial report, and the auditor comes in a year later and says, where did you get this number from? This is awful. And you go back to the source, they can't tell you where they even got the number from. And it's outside of this variance. And we've seen a problem where auditors will make the reports be restated. We've seen, the consequences are huge. So my point is, you really need to make sure that the providers that you're working with are trusted that they can give you the source of their information, and that it is going to be accepted by whatever auditors or reviewers you're going to have. Because the last thing you want is to be flagged to be audited for the next 3 years because you've had improper reporting. So really, really do due diligence on your data providers as well. Hope that answers the question at a very high level, RK.
It did, Louis. Thanks for an insightful and a detailed answer and a quick answer as well. Thank you so much for that. Next I move on to Rudy. Rudy, please allow me to call you as a digital bouncer because that's how I refer the cybersecurity risk manager of any organization. Because they always act as the mediator between the crypto wallet and the hackers. And as I believe, you're not going to let anyone in without checking their credentials. So with that being said, my question to you on this panel is, what are the regulatory considerations and consumer protections either needed or in place in the real world assets market? Your insight would help a lot.
Yeah, sure. So from my experience, each jurisdiction, each regulator have their own requirements. Many overlap with each other. I've helped the organization working towards DORA compliance in the EU. And currently my company is working on VARA. So that's one of the regulators in the Middle East. And what I see with DORA is operational resilience, right? We want to measure ourselves. We want to make sure that we measure our third parties, SLAs, key performance indicators. How do you measure yourself? How quickly can you move and restore? Are you doing those restores? The whole cybersecurity, a holistic approach, right? That is important because as we see, the market is growing, RWAs are growing. And so it brings the hackers, the advanced persistent threats, and they will come for your money. It's quick money. Everything is online. So regulations need to catch up, actually. And they do put those regulations and requirements in place. You need to do pen testing on your smart contracts, on your infrastructure, on your applications. And there is a whole raft of things that you need to look at. You need to be thorough and consistent, right? Consistent measuring, continuous monitoring of your systems, be aware. And I would say education is also just as important, right? Understand what is the indicators of compromise, understand how attackers work and how do they compromise, how do they attack you, maybe through third parties. Are you measuring your third parties? Are you looking at ISO compliance or any other type of standard that you can get out there? Yeah. Back to you.
Oh, wow. Thank you, Rudy. Thanks for those insightful answers. Yes, no wonder the cybersecurity team is called as digital bouncers in the current era of AI and blockchain. So we have the final question, and the final question goes to Butch. Butch, your insights on how can blockchain and tokenized assets offer safer and more inclusive wealth building options for long-term financial and retirement planning would help. Over to you, Butch.
Oh, thank you very much. Sure. And sorry for the commotion. I'm in the Tokyo office. We're located here in Shibuya, which is, I don't know if you've seen on TV, right near the Scramble crossing. And it's 4 a.m. here, but there's a lot of noise outside. So I have the windows open, but, there's a lot of hustle and bustle going on, which is good because, we're in very exciting times here in Japan. Not just for our community here in Japan, but also for our global community. That said, our business model truly is unique. And at the same time, we're plugged in very nicely and aligned very nicely to one, the regulatory environment here in Japan, which as you probably are all well aware, it's one of the most strict and stringent regulatory frameworks in the world. The upside to that is because Japan, puts a very heavy premium and prioritizes safety first. So safety, inclusivity, accessibility, affordability. I mean, those are all the things that our business model really stands out, and we're aligned in a way that we can bring that. And Japan, the Japanese are very risk adverse, and in terms of building wealth and in terms of risk taking, they prefer safety, and safety is really the cornerstone of the mentality and the mindset. Now, what we've done, our approach, we really stand out because we have a very unique business model. We have 6 verticals, and we also have immediate and direct investment opportunities. And now awareness, and I've heard this before with the panel members earlier, about scams and doubt around what is crypto safe, and there's so many benefits with what crypto brings, what blockchain technology brings in terms of efficiency. You see Japanese corporates now getting on board with that. While we work and operate in a very highly regulated environment, the good news is Japan, crypto awareness and crypto adoption is really growing and gaining traction here. The challenge is awareness. Here in Japan, maybe 1 out of 9 people are registered crypto users, not active traders, but just registered users. And what companies that are involved in crypto in Japan, what they tend to do is they focus on that 1 and not the 9. So they're really looking at the hole in the donut, not the entire donut. So what we're doing is we're looking at the entire donut, and what our business model brings, it brings opportunity and benefits, and now our community, we're attracting investors who want to know more about crypto, but it's not about the technology, as our president Lonnie mentioned earlier. It's not about understanding technology. It's really about understanding very simply, okay, what is the benefit? What can you offer? What do you offer? What is the benefit in terms of whether it's planning for retirement or planning, your financial planning based on what your needs are, and it hits. To me, it really hits home because I'll give you a real life example. One of our, I'm not trying to plug anything here, but one of our investment opportunities that we had, which is doing very well, we have the world's first SEC compliant convertible bond. And so in a nutshell, basically it's a note, pays dividends, but at the same time, it allows you to, when converted, it allows you to convert the bond, the convertible bond. You can convert it into real coin, or you can convert it into equity. Now, and the underlier is the real coin. And so, we're trading at about $7 today. The beauty of it is that we're the underlier, the Rio, we're offering it at a discount. And so, say it's trading at 7 today, you could buy the note. You can get a quantity of coins, hypothetically, let's say like 10,000 coins. Go out in the market, you buy at 7, but you're buying the note, you're buying it at 5. So basically, when you convert, you're making an immediate profit on the spread. Say hypothetically, you convert it today, you make that $2 profit. And why it hits home is actually my family has invested in it. My parents, my dad just retired, and also my brother and sister who live in the United States, and their family. I have friends and family here who have purchased the bond, and it's you don't have to, you could have a modest income. It's not a high entry. You don't have to have tons of cash to get in to purchase this, which is the beauty of it. So it's accessible to everyone, which is why it's doing so well. And in Japan, demographic wise, we have a very large elderly population, which is growing. The birth rate in Japan, the child birth rate is declining. So it fits in perfectly and to the needs of people who are looking for more stability in terms of their financial stability, but are looking for growth and higher returns relative to what's offered here in Japan, which the investment products that are offered here in Japan, the average household here in Japan, they invest and they put their money in saving deposits. Okay, and on average, saving deposits, are yielding 0.5%. So, and in corporate bonds, JGBs or Japanese government bonds, only a small fraction of households in Japan have assets allocated to that. So, just thinking about that right now, that's a solution and a void of what we have put out there in the market that benefits the people who want to invest, and that's all age groups. We have people ranging from 20s in their 30s. Like I said, my parents, they're retired. My parents are, my father's, in his 80s, and so it really touches and benefits really the masses, which is really what our aim is. And it's a practical way to, give, not only to give back to the community here, but also to launch our product and our project from Japan to Asia and to the rest of the world, which is what we're doing right now. So it's very exciting, and hope that everybody else is pretty excited to see what we're doing in terms of a practical usability that makes sense and that really benefits people who are on board with our project and with the benefits of what blockchain brings. And as everybody on the panel has mentioned, the security and the safety, we take a compliance first approach. That's why when we launched, before we launched the convertible bond, we actually, 6 years before we even launched it, we took the compliance first approach. We lawyered it up with reputable law firms, not only here in Japan, but also globally, to make sure that we covered that base first before we took it to market. And so that's something that our founders, our team, we are very proud of, and we will always continue to do. And like I said, we have many other verticals. We have a lot of traction with those verticals, and please look out for that. And glad to be here. Thank you very much. Sorry, I'm a bit long-winded. So
thank you, Butch. Thank you, Butch. I think that was a long, detailed feedback along with a day in the life scenario, plus the real-world assets as well. Thank you so much for your detailed, feedbacks and inputs. Jackie, how are we doing on time? If I can put a common question to all the panelists.
We are doing good on time. This panel is, we do the transition for our next panel at 3:30, so we are good on time. And definitely, from the perspective of taking a look at everyone who's here, definitely go for your lightning round.
Okay. Thanks, Jackie. Thanks for the confirmation again then. Gentlemen, the quick question, 15 seconds each is, as we look ahead, what is that one opportunity with digital assets and tokenization that excites you a lot, and one challenge that keeps you cautious on digital assets and tokenization? Maybe Jan, you can start off.
You said 15 seconds, right? I took 4 up.
Yeah.
Yeah, so I guess keeping it brief.
Let me put it this way, you can be quicker.
So I didn't quite hear, but yeah. So for me, I think the excitement is helping the environment. So I think if we can kind of use tokenization to tokenize real world data from projects that are helping the environment, and that can feed back into funding them and create a whole new ecosystem. Through that, that just leads to kind of better outcomes for everybody. So I think that's a really good, for me, that's a really good kind of focus area.
Okay, thank you. Luis, what's your feedback on my question?
Thanks, RK. Personally, I'm thrilled. We have been working with companies around the world to tokenize real world assets for several years. We've just signed a couple more. Very, very excited to be working with them. But on the flip side, what scares me is how many companies are out there marketing that they do the same thing. And oh my goodness, Rudy mentioned DORA compliance. Oh my gosh, do your due diligence. One of the companies in Europe that says they do tokenized assets, they right there in their legal agreement, they do not claim to be DORA compliant. They don't claim to be MiCA compliant. And it is awful. You really got to do your homework with every technology provider that you're working with. But I'm thrilled and excited to be part of digital assets in the future.
Thank you, Luis. Well said. Rudy, your feedbacks on the wrap-up question.
Sure. Yeah, I'm excited about crypto. I'm excited to see the ISO 222 and what that brings to the market. I think that's positive. So, yeah, I'll support crypto. Thank you.
Okay. Thank you, Rudy. Sorry it was breaking. Butch, your final thoughts on my question?
Oh, sure. Yeah, I'm also very excited about crypto, and as everyone here is as well. I think a key takeaway is hopefully, through education and awareness, we need to promote the benefits that crypto brings, and hopefully everybody else realizes that. It's not really an uphill battle. I think it's something that we have to just dust off, but make people aware and really let them know in real practical terms and layman terms, easy to understand way, that this is truly the next wave of the future.
Perfect. Thank you. Thank you so much. Thank you so much, gentlemen. As a closure note to this panel, I would like to thank every panelist who had been part of this summit today and part of this panel. And thanks for sharing your views on how consumers are exploring digital assets for wealth and retirement. Well, the final thanks, it should go to Blockchain Legal Summit, who hosted the summit today. And thanks to Jackie for involving all of us. Thank you so much.
Thank you. Before we leave, though, RK, please share a little bit about your views of the future of digital assets and wealth building, because we've talked a lot about the promise, and for sure, but we've also talked during the summit about the fact that it's not mass adopted yet, and yet there is traditional banks that are looking at including like Bitcoin into retirement funds, or they're the ETFs and things like that. So there are traditional financial instruments that are being created that will allow more mass adoption, even if someone doesn't have a wallet necessarily, because the financial advisors are going to be stepping into this. but there's also the need to educate these financial advisors too. But what's your overview and take as to where we're going with this wealth building in this community? It's a big question for you, RK.
Well, within this community, Jackie, I don't want to take a lot of time because this is a never-ending topic. But
Yes.
With respect to digital assets, most of the companies which are growing today, they are phenomenally doing well. And most important aspect is the microfinance aspect, where the peer-to-peer recognition is happening in very low-income countries and middle-income countries. That's also kind of triggering a lot of conversations in the decentralized finance area or the domain itself. From a digital assets perspective, this is an area which will explode. I'm not saying explore, which will explode a lot in the next 5 years, very sooner, because every company, every organization, every domain, they wanted to store most of the things in the digital asset format, and that expansion is, I would definitely say, to the power of infinity right now. And all the gentlemen over here today, they all shared the same views on how tokenization is exploring, how digital assets are helping the organizations to grow, how it is also helping the individuals as consumers to grow. Because end of the day, we are also consumers. Although we are ideators, we are product engineering leaders, end of the day, we are also consumers of some platform, one or the other. My thoughts are, as I said, we will have a much more mature conversation very sooner on this, wherein 2026, there's going to be a lot of exponentiated services which would be offered by so many companies in the digital assets area. That's my wrap-up thought.
I appreciate everyone, taking a look at our panel for sure. We have individuals that are in the cybersecurity space. We have individuals that are in the enterprise space. We have individuals that are in the accounting, financial, security area, as well as the application side. So again, as consumers, we need to be looking at who we're doing business with. And as everyone has said, look behind the scenes, not just on the front of the wrapper, and see the history of the people that you're working with, and do they have accountability? So with that, we are going to transition into our next panel. Thank you so much for being on. I look forward to having more conversations with each one of you. So let's go on to our next panel. Thank you. Hi, everyone. This is panel 4, and I can see that we have part of our panel already here, and we have our moderator who's hopped on, Michael Borelli. So thank you. Welcome, everyone. This panel is all about the intersection of AI and blockchain and all the intersections for everyday users. Michael, I'm going to let you take over right now and do your introductions and start asking, because this is going to be a very interesting panel.
Thank you, Jackie, first and foremost. It's great to be here. Grateful for the work of BLI and the opportunity to speak about AI at a critical junction in its stage. As you say, today we're going to look at the intersection of AI and blockchain and what it means for everyday users, and so on and so forth. We're delighted to have a stellar panel with us today. Each of them brings a different, something different through the expertise and experience. So first and foremost, I'll introduce them and then let them give an intro to or a bit of background on themselves. So James Gray, Director of Sales at Verstack, Clarence Briggs, CEO of Match Awards, Wesley Crook, CEO of FB Block, and Anthony Diaz, founder and chairman of RYO Digital. So should we start off with James? Are you with us?
Yes, sir.
Good to see you. Would you mind letting us know a bit more about yourself and your bit of your background?
Absolutely. Thank you for having me. It's a pleasure to be here. I look forward to hearing the discussion and being a part of it. I've been in technology, consulting, and sales, I would say close to 10 years now, different kind of technologies, different industries. The last 4 to 5 years, I've been specifically in custom software solutions, generative AI solutions, machine learning, large language models, fuzzy logic, things like that, as well as some work in blockchain, specifically across building and layer 0 and layer 1, different applications and different platforms. So I look forward to being part of this conversation and hopefully adding a little bit of good talking points and being part of a great discussion today. Thank you for having me.
Incredible. And next up we have Clarence. Clarence, are you with us?
I'm with you, Michael. I'm with you. My name's Clarence Briggs. I'm the head cook and bottle washer of AIT, Advanced Internet Technologies. It's basically a company I started about 30 years ago in my garage. So I'm one of the infamous garage startups, and I built it into a multi-million-dollar 2-time Inc. 500 data center. We provide web hosting services. We're an ICANN accredited registrar. And the latest thing that I'm trying to give birth to is an application called matchawards.com. I can tell you it's been a very long labor. Been in it for 3 years. I recently got involved in blockchain and AI. When I say recently, over a 30-year career, it's in the last 3 years. And I have found, I think, Michael, you referred to it as the intersection between AI and blockchain. I don't know if it's an intersection or it's a collision. I haven't quite figured which one it is out yet, but I appreciate being here today and look forward to our discussion.
Well, I think a certain Steve Jobs started from the garage, so good omens here indeed. I think we're also joined by Wesley. Wesley, can you hear us?
Yes, I'm here. Thank you. Glad to be here today. I'm Wes Crook. I am the CEO of FP Block. We're an advanced software engineering company that's been building exclusively in the blockchain Web3 space since 2017 and been in business since 2012. Our focus is on delivering dApps and various solutions to the Web3 community and clients within that space, leveraging both just traditional engineering and AI-assisted engineering. So glad to be here today.
Fantastic. And last but not least, Anthony Diaz. Anthony, are you with us as well?
Yes, I am. Can you guys hear me?
Yep.
Gotcha.
I was having technical
You're cutting out a
difficulties.
bit, but we can hear you when you're coming through.
Okay. Yeah, I'm Anthony Diaz. I'm founder of the Rio Project, and as Lonnie mentioned in the previous panel, all the things we're doing, and I'm happy to be here.
Michael, don't forget to introduce yourself, because with AI and partners, you have done phenomenal work, and I know you've been an honorary ambassador of Blockchain Legal Institute since the inception. So why don't you give an overview as to your expertise in this area?
Well, only if I have to, of course. Guilty as charged. My name is Michael, and I work for a company called AI and Partners, which is an AI governance software company helping firms implement global AI regulations like the EU AI Act, the Colorado AI Act, California AI Act, etc. Essentially in the field of AI governance. And Jackie and I have been speaking for some time now around AI governance, and she saw the opportunity around blockchain as was mentioned before, the collision. So hopefully can moderate the discussion here. But I'd like to start off with you, James, if I may. And I just wanted to, if we rewind a bit, go back to DeFi. And how do you think that, or how would you define AI enhanced DeFi and algorithmic trading risks to consumers or others?
Yeah, that's a great question, and that's something that I kind of deal with almost on a daily basis to both consumers and organizations. Because even though this technology has been out for quite some time, it really is not in mainstream adoption at this point because of misunderstanding, miseducation, I guess, and really organizations not wanting, and consumers not wanting to take that leap because of the lack of understanding and education, which is completely understandable, and that's the better way to do it. You don't want to try to run before you walk. But really, AI enhanced via DeFi and algorithmic trading is basically machine intelligence intersecting with self-executing smart contracts. In simple terms, it's analyzing using machine learning and AI machine learning and models to analyze massive data sets, predict market movements, execute trades, or execute lending or borrowing decisions autonomously without human intermediaries. And that presents two major points and two major things. One is it's an amazing opportunity that we have never seen before in DeFi and finance in the markets, but it also creates a new category of risk that we've never seen before either. And really, what from a consumer's perspective, it's all about the algorithmic capacity and bias. Many AI models to this day, even by the developers, are not fully understood because it is such an amazing technology and so advanced technology. They really don't understand why certain things execute a trade or execute an action in the DeFi space, in the fintech space. And what comes with that is that bias is naturally inherent because garbage in, garbage out. We've all heard that term before. If the AI models are learning or accessing bad data or biased data, it's going to create biased action and bad action. And so what we're able to see is actions and execution on things happening in nanoseconds, millions of interactions because the capabilities of the AI, but it can also create a new type of market crash or peril in the financial markets without that human interaction. At this point in the development and history of AI, we still need those human loops at certain critical junctures. And without that, if companies try to move too fast or developers try to create things too fast without having those human checks in place, it really can spiral out of control quickly. Because by the time we act and interact and kind of stop or kind of tell the AI to hold on or don't do that, it could be executed 1,000 transactions at that time. And if those are 6, 7, 8 figure transactions, you can see how it snowballs quickly out of place. And the model vulnerabilities and the contract vulnerabilities. DeFi is code. And if that code has bugs or is exploited in any way, it can result in irreversible loss of funds. And that's the huge risk. Outside of any other industry, healthcare or logistics or any manufacturing, financial is really the root of everything, finance and DeFi. And so if that base layer crumbles, every other industry that's held up on top of that is going to crumble as well. So it really has to be AI agents, self-executing contracts really are based on code, and that code has to be impenetrable as well as being very precisely written, with the AI drawing data and making decisions based on good algorithmic kind of data sets, and making sure that it's drawing from the proper places and not pulling from bad data and making bad decisions based on that bad data, because again, that can snowball very quickly. And then really just unlike regulated financial markets, DeFi ecosystems often lack those circuit breakers and that human intervention. The upside is that you don't have the humans slowing those transactions down, but the bad side is you don't have humans monitoring, potentially monitoring and stopping, putting in stopgaps to stop any kind of massive financial peril. And so it really needs to be as great as it is, as great as technology is, and as much as we all love the technology and have been using it for years now, inside and outside of the financial markets, we're still at a point in development that we need to have the human loop in there. I mean, humans are building these AI machines and these AI models, telling it where to draw data from, giving it access to certain data sets. But we still need to hold on to the leash at this point in time. Eventually, obviously 10, 20, 50 years down the road, these things will be much more intelligent than all of us put together 10 times, but we're just not there yet. So my biggest advice to consumers and organizations is, just like in blockchain and any other kind of advanced technology, do your own research, know what you're doing, know what you're doing, can implement what changes you're making as a consumer for your own personal finances or as an organization across a massive portfolio, and know what you're doing, get the information before you actually pull the trigger, and then monitor. Consistent supervision and monitoring of these algorithms and of these AI agents and all this AI technology, so that you can try your best to prevent any kind of massive peril in the markets.
Quite a comprehensive answer. And you used the word crash, and I think the IMF and the Bank of England warned of this a couple of weeks ago. General question to anyone who wants to answer this is: do you agree with James that it does amplify risks, i.e., that's how the cookie crumbles, or will these risks be present without AI being there?
This is Wes. I think the risks are there regardless of AI. I think AI just allows us to accelerate the potential risk of exploitation. We see it all the time in all the work we've done in the blockchain space with smart contracts, with just general software engineering in general, that poor software development creates very high risk environments. And you're seeing that time and time again with all the exploits across the various chains that you hear about. There was an exploit today that we saw. It was actually quite creative. It was on a project that we were no longer a part of, but they were basically draining their treasury over about a 60-day period, and they just thought it was trading volume. No one was looking to see that it was actually one wallet exploiting a hole within their bridges, that this one particular wallet was able to show that they had this trading volume there that was really just them draining the wallets out. So the client came back to us and asked what was going on. We did a quick investigation, and it was like, you know what, guys, this has been going on for 30 days. Y'all haven't been paying attention. So that had nothing to do with AI. That's just bad code on the part of the developer team. So I think it can be, I just think AI is just making things just much quicker and faster, but it's still there even without it.
Word of caution then from Wes with respect to vibe coding. So please, those of you, please do pay attention when you're doing that. But
vibe coding is dangerous.
Indeed. You mentioned about or you alluded to the role of data, being able to track those records and being able to see the wallet, the wallet address, and that is essentially provenance. And I'd like to move on to Clarence. So in your opinion, what would you say is the role of blockchain in securing AI generated data, such as in the example that Wes just gave there? Can you guys still hear me?
Can you hear me?
Yes.
Okay, and so we've got about 87,000 registered users in the platform, and it's a platform that has real-world utility. What we've done is we've combined social media look and feel with economic development. So you go in just like a LinkedIn, or you go in, and I'm coming from a very different background than you gentlemen, ladies and gentlemen. We go into the platform, you create a profile, just like you do in LinkedIn or Facebook or whatever, but you do it around a description. The AI grabs your self-description, and it's a business platform. So you could be an engineer, you could be an architect, you could be a landscaper, whatever it is. AI grabs it, and it basically converts it into NAICS codes, PSC codes, zip codes, every code imaginable that aligns with an industry, agriculture, technology, architecture, or whatever. So at the end of the day, it's AI powered, blockchain enabled. And what it does then, it begins to bring in opportunities in the form of G2B, B2B, government contracts, grants, loans that are specific to your profile. Okay. Now, what's interesting is, we have had a lot of opportunity in a very practical sense to figure out how to get AI and blockchain to work together. And I see blockchain as basically the immutable memory of AI. And in other words, people think that intelligence and memory are the same thing. They're not. Okay. At the end of the day, they're two different things. You can see the guy, Harry Matusi, he gets up, and he interviews 1,000 people on stage, right? And they come up in a particular order, and he remembers their names, 1,000 of them. Then they reshuffle the people, they come back up again, and seconds later, he basically can remember everybody's name in a different order and name who that person is. However, if you would have asked him to perform a complex calculation or something like that, he wouldn't necessarily be able to do it. So we've separated the two in the platform, and we use them for very different purposes. For instance, inside of our platform, we have something called Search Investigator. So what Search Investigator does, and to James's point, Wesley's point too, is that what we have found is the AI has the ability to, what I just call it what it is, accelerate corruption. Okay, we have now begun to trade on the DEXs. Okay, and I'm just going to put it out there. There's just a couple of things we see. We had to develop the Search Investigator tool because there's a lot of false information and basically just flat out lying that happens with government contracting. Okay, and I can get into that, but before I even get into that, we went out and we basically touched the DEXs and the centralized exchanges because I was looking at bringing my tokenized platform to a token launch. In fact, we've already started that. Our token is out there. It's called MapU. And I found two things. One, the DEXs are infected with MEVBots. James, I don't know if you would agree with that or not. They're dirty, nasty things that people develop. They front run, they get in the mempool, they inflate the numbers. Things that we call transaction or gas fees are really just everybody waiting in line while it bids up. Well, the average trader doesn't get a shot to trade. Doesn't happen. Okay, so the whole paradigm has got a problem. So then we switch over, we look at the centralized exchanges and we go, well, what do we got here? Well, what we have here is something a little bit different, but still just as problematic. Okay, we have custodial wallets. We have custodial wallets that are opaque. Okay, and then you basically, if you're trying to do a token launch, and you're just an average business guy like me trying to token launch and tokenize your platform, they're asking you to take $500,000, and I put $13.7 million into my platform, and they want me to drop $500,000 into this custody, basically wallet, that basically after I drop it in there, I have no visibility on it. It disappears into their engine. Okay, and I see Anthony grinning from ear to ear. Okay, it disappears into their engine, and what happens to it? So when I look at how, basically what blockchain's role is in securing AI, I think it's interactive. I think, like I said, AI is the intelligence, okay, but it's not accountable. Okay, blockchain forces the accountability. Okay, it creates that immutable record we can go back and look. So let me tack back to Search Investigator, and I don't want to be a time hog. So I got this thing, it's called Search Investigator. What does that mean? Okay, so what we found out was we're working with some very large organizations right now at the Department of Defense, heretofore now named Department of the War, Department of Energy, Department of blah, blah, blah. Doesn't matter. It's government, right? What does government do well? Nothing, except spend money, mostly our money, okay? That's what they do well. Well, you would not believe what we have found. Hundreds of millions of dollars being spent on vendors they cannot verify, okay, and they have no way of verifying right now. So we walked in with our platform, and our platform is like Star Wars, There's the light side of the force, and there's the dark side of the force. It's all data when you look at it, right? Data has no, basically prejudicial perspective when it comes to light side, dark side of the force. It could be used for good and be used for evil, but that's kind of the way it is. So what our platform does is it looks at all this data. I mean, massive data. It ingests the data and it produces opportunities for the users. That's the bright side of the force. Okay, then we have the Seth. Okay, so we got the Jedi over here, and we got the Seth. It also looks, our analytical tools looks at the dark side of the data. It says what's happening, what's going wrong, what's evil. Okay, and what we have seen by when we brought these tools into DoD, our platform, is we were able to basically pick out vendors, okay, that basically deliberately obfuscated their identities. Okay, so we found lots of spending irregularities, sole source contracts and grants and loans that should have been that weren't, that had 90 or 100 basically other competitors that should have been fairly competed. Why? Because they went to somebody's buddy. Okay, we found obfuscation where the same company would come in and obfuscate one letter, one character, but stack it all up at the same address. So it looked like different vendors, same address. AI is able to figure all that out, right? AI is able to go out and reach out to the different endpoints and pull in SAM.gov, US spending, LinkedIn, Google Maps, the TLO for all this stuff. Pull it all in. AI basically puts it all together and looks at patterns and goes, hey, there's something rotten in Denmark. There's something wrong here. There's something wrong here. Then the AI just goes, okay, what's next? So what we have tried to do is now take that data and capture it, okay, and put it on the blockchain so the AI can go back and look at that again. Because I'll give you an example. So we found a guy that basically had won multiple contracts, listed himself as a African Black-owned American business set aside. There is no such set aside, by the way. He was also a C corporation, an LLC, and he was providing $8 to $10 million a year to the Department of Defense for fruits and vegetable sales. Okay, supposedly, right? Well, when we took the AI and we reached out and pulled all the endpoints together, lo and behold, the guy's not African American. He's white as the driven snow. Okay, he is neither a C corp or an LLC. All the flags went off. Okay, basically now he's stamped on blockchain. Okay, he is forever captured there. So now when we go back and we look at patterns again later on, when he goes and applies for additional opportunities and contracts and grants, okay, blockchain has a memory. Okay, it's a memory like an elephant. It's immutable. You can't screw with it. Excuse me. You can't mess with it. Okay. And so what we have now is we have an anchor that we can go back to and we can investigate and we can audit. And these guys, after they got over being horrified at what we were showing them, which was basically AI's power, the power of AI to do the right thing and then to record it and how they could go back and reference it, we had a customer. So I'll stop right there. But that's just, my 2 of my cents worth of probably a couple of bucks in how the confluence of AI and blockchain really, we'll call it intersect, but I think they're on a collision course right now, and there's still a lot we haven't learned.
Well, you certainly seem to transcend both the light and dark side of the force there, and some cutting edge examples you've given. Really appreciate that. Going to turn back to you, Wes, if you don't mind. And Clarence talked a lot about the role of AI as a tool in the sense of and interacting with blockchain as a mutual ledger. So what, in your opinion, what do you see the role of AI-driven fraud detection in cryptocurrency transactions?
Oh, I think it's, again, it's something that helps you iterate faster. You can train the AI models, to look at patterns, to look at, real-time monitoring. They're always looking, just like Clarence was talking about. It's kind of going through looking for what's rotten in Denmark. It can look at language patterns to see if somebody's lying on a claim for insurance or medical form or what have you. You can absolutely use AI to assist in the investigations that, normal compliance departments and normal risk management teams look at when they're trying to detect fraudulent activities within anything, much less blockchain and much less in crypto trading or any kind of finance trading. It just allows you to really move faster in that. It allows you to automate it, so you're not having to have people behind the screen watching it. They can just let the bots run and do their thing and then flag out the red pieces that need to be acted upon. You see it all over the place. And, what's nice about, it's the good and bad of AI is it's a large language model that's being fed information. So the good is it has adaptive learning. The bad is nefarious forces can also feed in garbage information to train that model to do things that it's not supposed to do. So if anybody's worked with AI engines like Claude or Grok or ChatGPT or any of those, if you notice when it first comes out to market, it's really good, really, really good. But you give it that's why you're seeing so many new iterations of things. But after about a month, it gets really, really bad. because AI is being trained, it's listening to all of us as we're, inputting data into this thing. So if you're somebody in North Korea inputting really bad data, that engine's going to learn it, and it's going to take it into its model and start spitting that language out somewhere else where somebody's looking to get real information. So there's a bad side to large language models, and that's why you're seeing like Grok and Claude and ChatGPT coming out so fast with new models, is because they're having to clean up all this garbage coming in. So the good is we can learn fast, we can adapt fast, we can monitor for fraud quite nicely, but we also have to stand watch to make sure what's being ingested into the system is being monitored, because you could have nefarious forces coming in and trying to, corrupt that system and cause those bots to ignore a potential threat because it was trained to do so. So, AI and fraud detection, AI in general, really is nothing more than taking what human brain power is and accelerating it 100 times. So it's really nice. It has a lot of, it takes a lot of compute power, a lot of power to do it. But at the end of the day, it's just helping us do things faster. It's helping us, a human being watching a screen for 8 hours a day, probably 6 hours a day, they're not even really paying attention, because that's hard to do from a, thinking and being aware. Things will go by. I mean, I remember in the days, you have the big data rooms where you had all the screens up and everybody's watching what's going on, and nowadays it's turn on a bot and go to lunch. It'll page you when, it'll ping your phone when there's a problem. So AI, great tool, got a lot of things we have to continue to work on and improve on. And we really need to make sure we have the stop gaps and the checks in place to make sure we're not ingesting the wrong information into the models.
Well, interesting. I totally agree with you there. The tendency to be lazy, which is a very human trait, it's actually called cognitive miser. So all humans, unfortunately, all of us here and everyone in the audience, we're predisposed to being lazy. So it's good to know when to use it and what the risks are when you do that. Anyway, gonna put a pin in that one and circle back to more traditional digital assets and that. So I'm gonna go back to you, Anthony, if that's all right, and just touching on your experience in global international finance. How would you compare traditional financial services with DeFi alternatives?
I'd like to touch a little bit on AI, because I have a whole different outlook on AI and
please do,
and how it's transforming, the industry. I'm kind of caught in the middle, because I like AI because of what it brings to the table, but I don't like how it democratizes knowledge, so that you got idiots looking like they're smart, and they're out there, using AI, but they're not really intelligent people or cognitive thinking or creative people. They're relying on this AI to look creative, but when you peek behind the curtain, they're really not. And a lot of these, another thing about AI is that the fraud, the fraud that's going to be brought upon the world with AI is going to be enormous. I mean, we're even seeing it right now with these new projects that are coming on. I'm seeing on my newsfeed on X, that these new coin launch on Binance, nowhere on Binance, but it looks so legit, everything. And then when you go down the rabbit hole, you find out it's really not going to list on Binance, but it's going to drive a lot of people to go and buy this new token, because they know you list on Binance, you're going to get a 45% hit, or it's going to rise. But there's no fail-safe mechanisms in place yet to make sure that AI is safe for the average consumer. So that's my 2 cents. That's why I was laughing at what Clarence was saying, because I totally agree with, you can also do trash in, trash out. So I'm hoping that, I align a lot with what Elon Musk says when he says that AI, it could be very dangerous if we don't put controls on it. And I'm seeing that now just at its infancy stage. And I'm going, oh my God, extrapolate that out 100x within the next year on how fast this industry is growing. And we're all in trouble. So you need to have, you got AI that's doing fraud, and then you need the AI that's going to combat that fraud. And then it's just going to be a vicious cycle. And I'm just curious to see how this thing's going to develop. Although we are using AI in our platforms as well, but that's for another time to talk about.
Now, actually,
regarding,
can you expand on how you are using AI in your platforms? Because just like everyone else here, you're doing tokenization, you're using blockchain, you're using AI, you're integrating it. So share a little bit more about how you're kind of doing that.
Well, like in our, we just did a meme token launch. We're in the pre-sale of it. And, when I saw these meme tokens, I was going, why are everybody launching these meme tokens? They're like, excuse my, maybe I shouldn't use this word, but they're like crap tokens, and I'm going, there's no use case to these tokens, but yet these, you get all these people like Pepe Coin and all these other coins that are like Talk2a coin that was launched and it went through the moon. And I just go, how come nobody's utilizing this fever of buying meme tokens, but actually have a use case for that meme tokens for the greater good to promote cryptocurrency? And so we launched what we call Rio-chan. It's our mascot is Rio, a puppy, and Chan is an endearing term as cute in Japanese. So we called it Rio-chan. And what this meme token is it's a smart contract, analyzer, and it uses AI to make sure that the smart contract is a legit smart contract before you invest into the project. And it's going to go, and we're using AI for this on phase 2 and 3. It's going to go into the merchant shopping with utilizing that token into our ecosystem with shopping and gamification as well. But that's the first phase of our AI is portfolio management and smart contract analysis.
You'll be writing playbooks, no doubt, for the rest of us to follow and try and keep up with you, no doubt.
No, God, I got to tell you, we got too many irons in the fire and not enough time in the day. It's 5 o'clock in the morning here, guys. This has been a long day here in Tokyo.
What about? I thought AI was supposed to give us more time to.
I know.
To do things we want to, like play golf or do laundry.
Yeah, we're not there yet. But what was the question again?
So the traditional question, and you feel free to put an AI spin on it if you wish. With your obvious experience in global international finance, how would you compare traditional financial services with DeFi alternatives?
Oh gosh, that's going to be a long answer, but I'll try to condense it. Traditional finance, which we call TradeFi, what it offers the world is stability, consumer protection. It has an established infrastructure, and that's why all of us use it. But the drawbacks of that, which is why we're in the decentralized world, is it's centralized, it's not transparent, high fees, and you don't have control of your assets. It's in control of whether it's a bank or your stock portfolio, it's controlled by somebody else. And with DeFi, it gives empowerment to the individual. It covers, the unbanked. It allows financial inclusion for the unbanked. It has a low barriers of entry, and it offers transparency and speed and low costs. But there are also major challenges, which is scalability, regulatory scrutiny, like what we're going through here in Japan. I mean, we're getting our metal tested here in Japan because it's truly the most difficult regulatory environment in the world. Japan always watched, like, for example, when iPhone came out, because I invested in Apple, and in 2006 we know the iPhone was coming out because there was iPod, and the next iteration was going to be the iPhone. And I went on tour because I do business tours all over Japan, and I was telling everybody that Apple is going to be the #1 phone in the world, and nobody believed it because au and NTT Docomo, which is the phone system here in Japan, it's an amazing platform. They're on the CDMA platform, and they didn't want to take the risk because this is safe. This is what we're used to. This is what we know, and we don't want to take the risk. Now, after it was proven and Apple launched all over the world and all the quirks and the bugs were worked out, Then Japan says, okay, now we're ready to take it. And this is what Japan does with the cryptocurrency. Remember, Japan was the first country in the world that recognized the power of Bitcoin. Mt. Gox, the first international global exchange, was launched 5 minutes from my office down the street. And that was my exposure to Bitcoin. Yeah, so when we, and it was a fever, guys, back then, because I don't know if you guys, most of you guys probably know because you're very intelligent, but Mt. Gox stands for Magic the Gathering. It was a game, and it was a game, and they brought in Bitcoin to trade for the gaming. They didn't intend it to be what it is today, and so we got involved in that, and that's when I thought, okay, we can use this kind of payment system into our health and nutrition product line, because we've been here in Japan. I've been here in Japan for 32 years, marketing health and nutrition supplements that we make. Just for you guys to know, I'm an American. I just happen to live in Japan. I've been here for 32 years, back and forth, but I'm originally from Southern California. And so with Japan, what we did is we looked at the Bitcoin model, and we said we want to bring that payment system into. We thought that was the future, because the Japanese are always forward thinking, but they want to make sure that it's safe first. So that's why when Mt. Gox crashed, boom, the whole country reeled back and went into the dark ages with crypto and said, "Oh my God!" Because you guys know what happened with Mt. Gox. It was major. But what it did show me was the uptake. That the Japanese people, hundreds of thousands of people were piling in when Mt. Gox happened. And I said, and before it crashed, we wanted to bring that payment system into our ecosystem. I had no want or idea about blockchain. I didn't even want that. I just wanted that electronic payment system for our regular business, our bricks and mortar business. And when that thing collapsed, and I really started researching the peer-to-peer white paper, the Bitcoin white paper, and I said,
yes,
man, how come nobody's doing this right that's going to actually hit mom and pop? And that's why that led us on the journey to create our own protocol, so that we can lead. What we did is we lead by consumer first. Technologies take the back seat. I want to make sure that grandma goes to the store, and if she can buy a rice ball by just point and click, beep, beep, just like a credit card, but it's all being reconciled within the blockchain, that's when we have mass adoption, when you get to that level. And that's what we're attempting to accomplish here in Japan, is we're bringing down the noise of all the technology down and simplifying it so that people can just go and it's just another form of payment. Beep, beep, you walk out the store, get your rice ball, and you're down the road. But it's being reconciled on the blockchain, fully transparent. We get it down to that level, then you can use blockchain for anything else. Rice ball first. My whole company, we have a rice ball. The rice balls are our target, man. We got to make sure that we can use our coin and point and click just for this rice ball. And so that's why with the challenges that we're facing, though, is everybody is in the technology space. Whenever I go to conferences, everybody is self-gratifying themselves. You can read into that word when they talk about how great their technology is, and this is what we're doing. And I'm going, yeah, but in order for it to get mass adoption, you need to bring it down to the consumer level so that people aren't intimidated and they feel safe in using it. And that's why I believe that and that's why we have led with regulation first. I know we're supposed to be anarchists and screw the government, and Bitcoins are the people's money, but everybody's smoking something if they think that this industry is going to overtake the regulations and the governments and the banking system and the Rothschilds, and we're smoking something. You have to go to bed with these people, and that's what we have done. We've gone with the regulators and said, we're bringing blockchain, but we want to make sure that it's okay with you, so you can give it the blessing, so that we can get it out to the masses. And that's why we lead with consumers first, technology second. And the only way that's going to happen, Michael, is you need to bridge DeFi and TradeFi. It needs to kind of have like a hybrid model, where in order for us to get it out to the masses, you need grandma to be able to understand it from a TradeFi standpoint, but there's a bridge underneath that's powering it, which is DeFi. And I think that's the first step towards mass adoption. And one last thing, this is why ETFs are so huge now, because people that invest in stock, they want exposure to Bitcoin, but they don't want the risk. You know what I mean? So that's why they go into the ETFs, and now everybody's jumping on the ETF bandwagon because they know. You see, the powers that be, they said, okay, we're going to regulate the crap out of this industry until we figure out how we can profit from it and benefit from it, and then create, you got BlackRock and all these companies coming in and creating their own ETFs. What happened, dude? 10 years ago, you were anti-crypto. Now you're pro-crypto. Why? Because you control the keys. And so we have to bridge that gap by being regulatory compliant and friendly, yet still have our autonomy by operating on the blockchain. So that's a short or long answer to that question.
Michael, you have time for a lightning round for everyone.
Great. I was going to say, Anthony, you're definitely preaching to the choir, regulation first, and a lot of parallels with AI there. So I'd love to get your opinion on that and how we potentially leverage the lessons there. But I guess open question, whoever wants to answer this first, and if you want to add any AI elements in, please feel free. So the question is, how would you explain DeFi concepts and opportunities to a consumer audience, almost as if it's a 5-year-old toddler who has absolutely no idea what you're talking about?
In 30 seconds.
Who wants to go first?
Well, I'll go first. It's the rice ball concept. You don't have to explain DeFi. You just need to make it simplified enough for people to see that this is convenient for them, and it's something that I can use that's bringing ease to my life instead of making my life more complicated. And when we lead that way, and
I think
that's what we're working on right now.
I think the biggest thing is, for DeFi, for anything in the blockchain space, we need to separate blockchain from all the other nonsense going on in the crypto world. First off, blockchain's a technology. Everything else is a pyramid scheme. So at the end of the day, the problem with the Web3 world today, and I think Anthony is spot on, we have to get it to where grandma can go click and point and hit the button and it works. We have too many technology stacks in this space. Until we have a common set of standards, common set of rails, a common blockchain that builders and application developers can work to, and flip the script from this ecosystem where the ecosystem is dictating and paying for the builds, or I call bribing the builders to build for their ecosystem, and then they're bribing the users with rewards to use it. Until we flip the script and say, here's a common infrastructure. What does the user want? Let's build applications for the user and not worry about if it's Solana or Ethereum or Near or whatever, and get to common infrastructure. So explaining it to a kid right now, is this just a train wreck? And we're just trying to sort out which car has the gold bar in it.
Wesley, I think I'm just going to inaugurate you to my church.
That's my. I know Jackie and Matthew seen me speak in a lot of conferences. I am all about, we need a single infrastructure, and all this mess we're doing right now in 5 years, 85% of them won't exist.
Well, a lot to take in there. I think
one last thing I'd like to say though, there's so much. If you think the space is complicated now, with AI, give it 2 more years and watch what's going to happen with AI. It's not going to simplify things. It's going to complicate it even further. And, it takes people like us that at this round table that actually implement, infrastructure that actually works for the common man. And until that happens, adoption is just a dream.
All the more reason to follow each and one of you on LinkedIn, contact you, and obviously reach out to Jackie and the team at the Blockchain Legal Institute for more of these types of things. I think these conversations go a long way. Thank you, gentlemen, for your time, and thank you, JC and the BLI team.
So let's have.
I'll reach out to you guys. Thank you guys so much.
Let Clarence do 15 seconds and James do 15 seconds before we bring on our next panel. So Clarence, what are your thoughts? 15 seconds.
When I look at DeFi, I look at your transactions. I look at a standard. I can tell you, I was here back in 1995 when I'm getting I'm getting. Yeah. Is anybody else getting any interference, or is it just me?
We were having
no, we yeah, you froze there for a minute, Clarence.
Okay, all right. Yeah, just very quickly. I'm talking over people that I don't know if you can hear or not. But as far as goes, grandma needs to be able to understand it. At the end of the day, I was present, and I was in the data business when basically DNS was first coming out. My first domain registrar, I was an accredited registrar for domain names, the top TLDs.com, .net, .org. In the beginning, there was Internic. Internic was so small, I knew everybody that worked there personally, because from my garage, I would call the phone up. Well, at that time, there were emerging standards that we've all talked about here, and there were a lot of them. And they're saying, okay, people aren't going to remember numbers, they're going to remember names, okay? So not IP addresses, they're going to remember names. So how do we go about and articulate what the domain name registration system is, how it works, how it basically the root name servers work, and all that? And it gets complicated. At the end of the day, what we were able to do is basically convince people that, hey, a website is nothing more than a virtual address. You put your shingle out there, it's your address, it's where your business is. It can even incorporate basically a cash register, a 1-800 toll-free number, and all that. And we had to make that transition then so it would be adopted and go mainstream. And at the same time, I was here when every zero-day exploit came out. And you bet those same types of exploits are going to come out with AI as well. I think Anthony's spot on. It's there's a light side and a dark side of the force. And I think that we have yet to see the worst of the dark side. We have begun to see it. And what we have done is we have followed basically the American judicial system. And we have created with our AI, our search investigator, our AI basically is argumentative. So we have created with our AI a prosecutor, a defender, and a judge. And we deliberately pit them together in opposition. So we will get something in the middle, or at least a semblance of truth. And then we have an arbiter or a judge that makes a decision. But I think the way is mass adoption. And I still think there's a lot in front of us. And we're going to have problems. We're going to have issues. But I believe that there needs to be, like Wesley said, eventually 85% of this junk is going to disappear. I've watched it happen over the years in the past with different technologies. And there's going to be a standard that's going to have to emerge. And then we're all going to have to follow. Otherwise, we're not going to be able to talk to each other.
Understood. James, what and your last take on this before the next panel comes?
Absolutely. And I think just to kind of hopefully summarize and kind of pull everyone's comments together on this is it really needs to be that KISS method. Keep it simple, stupid. The user-facing portion of these technologies, cryptocurrencies, DEXs, blockchain, everything needs to be Paw Patrol. The background behind the scenes can be a Chris Nolan, sci-fi epic, that kind of craziness. But the forward portion, the consumer-facing portion, needs to be as simple as possible, so that you can get mass, consumer adoption, mass, residential adoption, and will then build the necessity and all the infrastructure, and that out of that will come institutional adoption, and that simplified process.
Yep.
Totally agree.
Amen.
Thank you, Michael, for being the moderator, and everyone else who's been on this panel. Again, we're about to transition to our last panel, and then we have our end note. So everyone,
you guys.
thank you so much.
Great job, everybody.
Yep.
We are going to be the first coin born in Japan going international.
We've been working so diligently to make this project the most groundbreaking project.
Rio will be at the forefront of this revolution.
Rio is a digital payment solution
used by the masses.
Greetings, everyone. This is panel 5. not the last panel, but, because we have our end note coming up and we have so much to talk about. There's been so many great conversations. This panel is all about breaking barriers in blockchain innovation, whether it's financial, whether it's technology use. I know that there's one more that will be joining us, but we're going to start. So I'm going to have each one of you introduce yourself, and I'm going to then ask you different questions. You all represent different industries. So you're actually, the cornerstone for what's going on within our ecosystem, because you see the change that's needed, the change that happened in the past, and where we're going in the future. So I'm going to start with Alexander, and then we're going to bounce it over to each other person. So Alexander, I'm going to let you introduce yourself, and then we're going to kind of go on.
Hi all, ladies and gentlemen. So Alexander Rees-Evans, I'm president at Norm Partners. To sum it up, we specialize in business to government contracts. We've got a portfolio of about 55 countries as of now. And I've been in the space for quite some time. Wrote the only book in the world on how to launch a token, published by Apris out of New York. Spearhead an accelerator where we bridge some big brands like Lamborghini, L'Oreal, a few other big entities. I'm also on the board of the United Nations for the blockchain initiatives, the UNDP precisely, the accelerator. I'm on the board of Thomson Computing, the largest European laptop brand, period, and also the Global Family Office Investment Summit. A pleasure to be here.
So next, Caleb.
Sure. My name is Caleb Stevens. I'm from Lakeland, Florida. I joined the Rio project at the beginning of the year. And I'm the corporate communications person for the company. And I think the Rio project doesn't need any more introduction. I think the chairman and president have done a good job introducing it. So yeah, that's me.
Ali.
Ali Al-Husseini here, CEO of Medici Land Governance. We've been around, we're the first to put blockchain land recording in the US and in Rwanda. And then since we've been going for 8 years now, the idea behind the company was to democratize land ownership and property rights. And as you all know, about 70% of the world is untitled, and we thought that this would be the best application for use of blockchain. We've been doing it globally, and now we're back in the US heavily, working with different cities, counties, and governments to ensure that a streamlined approach is looked at and a more efficient way of recording property rights is done. Very nice to meet you all.
Matt.
Hi, everybody. I'm Matt Tatum. I own Tatum Cybersecurity. I'm also a web developer and Web3 developer. I've been in the space for about 25 years as a tech. I started as a network engineer and started a web company down here in South Florida about 25 years back, and still run it today. Have a large client list of customers that I work with, but I've shifted heavily into the cybersecurity space, where I work in compliance for companies that are looking to get CMMC compliant. That's Cyber Maturity Model Certification, which is basically standard now. If you want to do any business with the Department of Defense, you have to get your companies compliant, and that's sort of the direction that I work in now. I also work in the Web3 space, where I develop the apps and things of that nature. I'm very heavily into blockchain. So yeah, that's me.
Thank you.
Thanks.
Mohan, go ahead and introduce yourself.
Hey everyone, hi Jackie. Sorry, I was in another link trying to wait, but thanks for the opportunity. Hi everyone, my name is Mohan. I'm the co-founder and CEO of Decharge. And my background has always been about building at the intersection of technology and mobility and energy. So I've come from a serial entrepreneurship background. And a few years ago, when I was trying to buy the EV, I saw firsthand the nightmare of the charging infrastructure across the world. that not almost non-existent. So that thought and that gap became the seed for what we built at Decharge. So what we're building is very simple to describe, but the impact is very, very powerful. We're building the Airbnb for EV charging. And what we do is, instead of centralized companies spending billions of dollars trying to build infrastructure, we decentralize this entire opportunity and bring it to the community so that they can own a piece of this infrastructure. So we flip the model and make it a deepen approach, right? So yeah, today we are operating across 1,000 plus charging stations across the world. Majority is based out of India right now, but we are scaling rapidly in Southeast Asia, signed some very exciting partnerships across Singapore, Thailand, Malaysia, Vietnam, Indonesia. Also moving very fast in US with some very big partners. In Europe, we're in Norway, Sweden, and in Africa, we're in Kenya and Tanzania. So yeah, I'm excited to be a part of this panel and look forward to chatting with you all.
So one of the reasons why I wanted to kind of assemble each of you on this panel is because of the roles that you play. So Ali, with real estate, homes, that's the essence of individuals. They need to have a home, they need to eat, they need to, have some basics. So you were talking about the importance of real estate around the world and the need for transparency. Can you explain a little bit more about how you see tokenization, how that might help some of the barriers that might exist within, different communities? And how do we kind of make this more accessible using the platform that you created and then just applying this in the real estate side?
Yeah, I mean, I would say, before cryptocurrency, your most valuable assets other than the stock market and crypto was your home. And most people were able to give their homes to the next generation as a wealth inheritance. And that is something unique to our culture. That's not something unique to other cultures. India has seen that boom, but the rest of the developing world has not seen it because most of the land is not titled. So giving that same opportunity to the developing countries as the developed world has done is very critical. And you cannot, back in the day, the only measurement between doing business, standard of doing business in a country, and was one of those categories, and the biggest weight on them is ownership and security of land tenure. So land tenure security is very important, and being able to, any of you, if you decide tomorrow to move to, I don't know, to Kazakhstan, you want to make sure that if you're going to buy a property there, you want to make sure that you can get a title for it. Otherwise, you're not going to build your cybersecurity factory or whatever company you're trying to build, or even open an office, because you want to make sure that if you buy a place, rent a place, get an office, it has to be secure. So the idea behind tokenization is not it's not new. The idea behind it is just creating a mechanism in place that is much more efficient, while the system in place that we have is no longer efficient. If you look at the consumer side, we have very much advanced with one-click pay. You get everything delivered to your door. But then when you want to buy or sell a property, you have to go through this cumbersome process. And in America, it's even much worse because you have to go hire someone other than you or the owner of that property to go and tell you that this property is free and clear. Because the document that is considered the title deed is not your title deed. It's called a deeding system, meaning you have to prove for the last 50 years that you have owned that property. So tokenization brings immutability efficiency if you think of the blockchain side. 2, it brings the transparency. 3, it brings the efficiency. And think about how quickly you can tap and pay on your phone. If you go and tap and pay, how you can do the same when you're buying and selling properties. 5, it creates a whole new market and whole new dimension for you to borrow money and raise money.
Yeah. Now, so that's on the real estate side. I know that I asked you, Mohan, to come over because everyone has some sort of transportation. So when we're looking at helping our ecosystem become more sustainable, helping our earth, and again, people are using blockchain and supply chain to make sure that things are organic or are what they say they are. On the car side, on the electronic vehicle side, what have you found globally that's needed, and how is what you're creating helping with that?
So the way I look at it, right? What we and let's take a step back and look at the broader blockchain aspect of in terms of global mobility. First, we talk about cars, and then we talk about the broader mobility space. Blockchain in general is making this entire space a lot smarter by creating a trustless relationship with the data itself and the entity, all the entities in the entire spectrum of the mobility aspect. So, for example, when we look at this space of mobility, we're looking at every vehicle having its own ID on chain, and then the entire history of the vehicle itself, which includes right from ownership all the way up to repairs and then resale and the battery health and mileage, all of that bringing on chain, which makes it transparent and non-tamperable, right? So if you look at companies like BMW and Volvo, they're already doing this for important and valuable materials such as lithium or cobalt, and for the entire life cycle. And for the entire supply chain itself, companies like Ford and Mercedes have been piloting blockchain for some time now, all the way from mine to factory. So this particular space has been revolutionizing the entire mobility sector. And as the demand for EV grows, blockchain becomes even more valuable for this entire space. It becomes so critical, and that's where I think decharge plays a big role, especially in the EV charging spectrum. Companies like decharge and even Porsche, for example, we are using blockchain to handle payments, to handle trustless payments. And when you look at if you look at about the next 5 or 10 years down the line, we are looking at autonomous charging infrastructure where you have companies like Robotaxi, for example, or Waymo, others who are using charging infrastructure in a trustless manner so that they can have this entire machine economy built. Uh, the icing on the cake is the entire peer-to-peer energy transaction, where I think it has a very big transformative nature, and the opportunity itself for the, because the grid is often unreliable and it cannot scale that fast. So the peer-to-peer energy transaction is going to make this a very open market so that people can go and produce electricity from renewables and then sell it peer-to-peer through blockchain technology at a much higher rate. So decharge is enabling all of these aspects, and we're just helping scale this mobility sector so that all the participants are equally involved in this. So if I have to sum it up in a way, blockchain is turning vehicles into assets and trusted vehicle platforms, and decharge is building the entire rails on which the infrastructure is built and scaled upon over the next few decades.
So, and I appreciate that. So, Alexander, I'm going to hop over to you, but this question is for everyone because everyone has experienced this. So, Alexander, I know your role has been with International World Blockchain Association and also with one of the committees within the UN. You see governments, and you've dealt with governments, and you've dealt with how to kind of educate some of the government individuals on the necessity for blockchain and applications. What do you see as the openness of these governments to this idea, or what are the steps that we need to take? Because all of us are in this space together, and I'm looking at smart homes, I'm looking at smart cars, I'm looking at real estate. All these are real use applications. But if we don't have the regulations to help us be able to navigate this, to allow us to be innovative, we're going to have challenges. So what have you found in dealing with the governments, and where do you think we need to go?
Very good questions, and a couple of points you brought up that are quite pertinent also. Just regarding regulations, if we compare Web3 with the whole token ecosystem as well, the reason why there's a lot of liquidity in it is because it's high risk, high reward. As soon as regulations start coming in, that lowers the risk barrier, hence it lowers the reward barrier. That's why the market starts to choke itself slowly as well. And I have a lot of the liquid VCs, LPs, they've all moved into liquid investments. And that's why there's a very big choke at the beginning of the chain. So not a lot of innovation can get that funding to build, in my opinion anyhow. Regarding governments and how to get involved with them, First of all, are you speaking with the right entity? Do you have the right relationship with them as well? There are about 3 types of options out there today that make possible to a certain degree these type of interactions. One, it's lobbying. It only really works in the USA. Very expensive, very time consuming as well. Second, you've got the ex-military folks, Secret Service. They may know a few people, but again, it's very dark, quite obscure, under the table dollar bills, and you get an intro to somebody who's just not relevant from the government, so you waste time. And the third option, it's maybe an ex-politician from that country where half the time they're obsolete, again, under the table dollar bills. And even in bigger countries, more developed countries, and I'm not naming names, but these things happen in Europe as well, in more developed countries. And the last option, like I said, with them, it's these ex-politicians, and they maybe make an introduction, maybe you can get a photo shoot with the president, but again, 6 months down the line, you don't have a contract, and nothing's happened. So first of all, it's about having the right credibility, I would suggest, certain arguments of authority, having the right network that enables you to tap into them as well, and then it's knowing how to navigate the conversations. What is the narrative that you're approaching it with? And the main thing that governments care about, I'm speaking about governments, not the individuals in governments here. It's, as of now, it's getting people into work, so job creation, and basically making money because everybody's in debt. It's pretty straightforward. The big pain and the big problem here is that a lot of the bigger countries, they can't move nowhere near as fast as the developing countries to absorb these technologies. And once you've broken down all the barriers to entry, they're just not able because you've got so much red tape to cut through. And that often comes from the fact that there's a tremendous amount of incompetency as well. You have a lot of people in these positions and they weren't good enough to go to the private sector, so they stayed in their position. And it's quite complicated to navigate them because if you bring something up to the table that's absolutely fantastic and will be very, very good for the country, if they think that you're smarter than them or that they don't understand it and they're too embarrassed to ask questions, they'll say, oh, fantastic, fantastic. And boom, end of the road, it's done. So it's about that delicate, subtle way of being able to navigate these conversations. And usually instead of going straight for even all these middlemen getting consultancy fees from governments trying to negotiate these things, it doesn't really work. The best approach is to try and instigate a pilot project. And then once the pilot project is successful, you can move into a more stable form of contracts with the government.
So, Matt, how would you like to respond to the question?
I think he's pretty much dead on in regards to knowing the right people. I mean, it is a bit of a process trying to get people to listen on the importance of blockchain right now and how it fits into everyday use case scenarios, right? Not only that, but the importance of securing blockchain. I just don't think enough priority is being placed on it, especially here in the States. We've seen a lot of hacks over the years here, and networks go down. It continues to be a problem. There's, compliance is not all on the same page, so everybody's all over the place in regards to how do we actually secure everything. And that's, if you can't get the governments to move, then ultimately we're kind of at a stuck point when it comes to moving forward with blockchain. Right. I mean, fortunately, with this administration, we have somewhat of a crypto-friendly president in play. But let's be honest. I mean, we're behind still in where we need to be when it comes to getting things moving in the right direction with blockchain becoming mainstream. I mean, at this point, it really should be everyday life for everybody should be a part of blockchain, and it just doesn't seems like a very small sector still of people that take it seriously, right? That it's going to change the world dramatically.
I think that there are going to be wake up calls like what happened with AWS. People are going to see that when you have centralized infrastructure, you need to actually make it a little bit more decentralized. Caleb, I know that we've learned a lot about the Japan focus and everything else like that. But what's your take about the importance of having government on your side, or how do we educate government to be supportive? What's your take on that?
Yeah, I think a big thing that it comes down to is, especially in America, a lot of the politicians are up there in age. I think the average age of a congressman in America is around 66, I think last I checked. So it sounds funny to say, but we really do need to dumb it down to a level that the people in government can understand, because blockchain, as far as like accountability goes, it's one of the best tools we have. And getting our government on board requires them to actually understand what's going on with blockchain and how it can help them.
Ellie, you've also navigated many countries around the world. What's your take about the various openness to different individuals within different communities to learning about this tech to make it more useful for them?
Yeah, I think it depends on the community you go to. Here in Japan, the younger generation is very open to adopting new technologies. The first time I came to Japan back in 2012, 2013, completely cash-based. You had to go to an ATM to get money out. You couldn't pay with a credit card. No such thing as tap to pay. And just in the last 10 or so years, the younger generation has almost completely abandoned paper money. Everything is tap to pay. Everything is integrated into your phone. So slowly, the older generations are adopting that here in Japan. In my community back in Florida, I was with a lot of artists, a lot of musicians, and all of them are always looking for the cutting edge on technology. So I think, yeah, having blockchain technology being a part of everyday life and integrating that simply, I think the younger generation is definitely adopting that. And hopefully, as it simplifies and becomes a part of everyday life, the older generations can pick that up as well.
Thank you. Ali, what's your take?
My take is when I started this business, I started in the US and people thought I was crazy. I mean, give a little background. I mean, I think I worked for overstock.com and we were the first in the world to take Bitcoin that had a revenue over $1 million and we had a revenue of $1.5 billion. And I was the vice president of the company at the time. And everybody thought our CEO was crazy, even though he was the most avant-gardist guy ever in the world. And he saw everything before anybody saw it. And then he got scrutinized. The shares lost half their value. Everybody now is putting money in MicroStrategy and all these other companies that are literally either buying Ethereum or Bitcoin. And we were literally the first. That was 2014. I mean, Coinbase offered us 5% of the company, and he decided he's not going to take it. It's not fair because he's such a righteous guy. You look him up, Patrick Byrne. He used to be called the Messiah of Bitcoin. Long story short, when we started this business, after I left the company, Overstock, I couldn't get adoption in the US. It was very hard to get people to understand what we're doing. And I tell you, it's like, it's like what cell phones did for India for leapfrogging. And that's where I think a combination of AI and blockchain will be doing for the rest of the world, will be much more advancing everyone way further ahead than the US. And we were able in 2018 to build a paperless system using PKI, blockchain, biometrics, and digital notaries to buy and sell properties within 20 minutes online. And we did that after they issued 8 million titles for people in Rwanda. And they were willing to adopt the technology. They were willing to do the testing. They were willing to do all of that, which is not something we are willing to do. Right. I signed with de Blasio a contract 3 years ago, or 4 years ago now. And Adams took it over. And then once his commissioner came over, his commissioner doesn't understand. He understands 1 + 1 = 2. And he understands the commissioner of finance, older guy, older white guy, the typical, people in government in the United States of America that just understand things the way they want to understand them. And he just blocked the project. and then explaining to Mayor Adams at the time what the value of this and how this is very important for deed fraud and all these other things was super hard. But I don't see that anymore. I used to see that. I don't see that anymore. And that's why I have a bigger focus on the US market now, that I think we can move a lot faster in the US, because a lot of the infrastructure in the US is very old and it needs to be upgraded.
Yes.
And I think this is the time where we can move further and faster along.
I agree with you on that. Mohan, I know you've been traveling different communities even now. What have you seen in terms of the openness for adoption of this technology, or even just barriers?
Our thesis is very simple, right? And most of the governments actually, we have to take this away from the lens of cryptocurrencies and look at blockchain as a solution that is really transforming a domain, right? So from a perspective of infrastructure, at least, if you remember, like 25 years ago, this whole cycle, the parallel of telecom infrastructure, where people had to lay telco towers, was very expensive. People would spend billions of dollars when you had 20, 30 years of ROI on it. This is the best example. And when I go to companies, when I go to Singapore, when I go to Thailand, Vietnam, they don't understand technology. I say, you don't have to understand cryptocurrencies. We are not doing anything in cryptocurrencies. We are building a new vehicle to bootstrap capital expenditure and physical networks through incentives. So communities try to come in and bring their time. They bring their whatever they have, like locations, real estate, permits, rentals, whatever they can into this ecosystem. And governments understanding and realizing that communities can come together and build such large, trustless systems is in itself a huge transformation, because instead of spending and pouring billions and billions of dollars, which has like a 10, 20 years of ROI, you're looking at an entire community coming together and saying, look, I'm building something very efficient from day one, right? So I think, like Ali said and rest of us, the combination of AI and blockchain as a solution layer is going to really transform the landscape as we know it, especially because these are new vehicles of capital formation now. And for a lot of companies, especially related to the physical world and the infrastructure, this entire sphere of allocation of wealth and human coordination is going to change the game. And governments are understanding that they have to either play this game smartly or they will be left out. So that's why if you see, even in India, for example, the government has its reservation around cryptocurrencies, but they have partnered with one of the largest companies in India to say that, hey, okay, let's start implementing blockchain technologies through a verified layer like a ledger to start with into real estate, so that they can understand what solution it brings, right? So yeah, I think what I have noticed, at least over Southeast Asia and in the regions I work with, is that the governments are at least trying to understand what it is, but they're heavily mixing the two things. They're mixing speculative cryptocurrencies and meme coins and blockchain technology together, and we are working very hard to make them understand that they're two different things, right?
I agree with you. Given that we are, this is a summit for consumers, but consumers are businesses and they are all different levels. They're enterprises, they're governments, everything. We're talking about real estate, we're talking about cars, but let's talk about other real world examples that blockchain is using that maybe will also help smooth the adoption, because like you said, Mohan, it's not on the cryptocurrency side, it's a real application. So if you want to take like 30 or 45 seconds just to kind of share an example with us as to so the audience might not know of some of these examples. So Alexander, I'm going to start with you first. You've seen, a variety of countries and a lot of DePIN or other applications. What one comes to your mind that maybe might make a consumer say, oh, I want to use that in my home? or my business? What are your thoughts? Anything that comes to mind?
It's more on the macro level. At the end of the day, people use things that are useful to them. And if you want to forcefully implement or integrate something, it's either through rewards or punishment. Hence incentivization via cryptocurrencies as rewards, etc. So for the macro, I would say that. And as a micro level, there's one that's pretty straightforward where it's just useful. It's called PathPulse. It's one of our portfolio companies. And it's an application you can download on the phone. All the Uber drivers, Bolt drivers around the world, any taxis, they've always got the phones glued to the window with the camera facing outside. So it records live, it detects potholes, it detects somebody running a red light, an accident, all these different things, collects that data, and basically they've got to do nothing. It rewards them at the same time just for using the app with their own cryptocurrency, and that data is sent to the relevant departments with the government so they can fix it, or they can sort something out if it's an accident, send everybody that needs to go there. So that's just a very easy use case for a good blend of AI and blockchain, in my opinion.
Yeah, no, that's a very good application. Caleb, I know that you're in the Rio ecosystem. What would you suggest that might be an application that people might want to know about?
Sure. Yeah. So one aspect of using blockchain technology that on a micro level is a lot of community building, especially in online circles. There's a big thing on ownership inside the digital space. So people are seeing that now with like NFTs, different things where it is a digital asset, but it is owned by you. So I think in a lot of just social communities online, having blockchain technology to sort of put your personal footprint on it, saying, this is mine, I am tangibly a part of this digital community, I think really ties people into the communities that they're already in to a deeper level. So for me, I think that's one of the best uses practically for a person, is having that ownership of a digital mark on the internet.
Ali, what about you? I know that you're heavily embedded in the real estate side. So
yeah, I don't think it's just real estate. I think it's everywhere. I mean, anything on the supply chain side.
Yeah.
If you look at any documentation that goes through a bill of lading to shipping that needs authentication, all of that for customs, blockchain does miracles there. Anything to do with tracking, like there's a great company that we used to be involved with called Grain Chain. They're doing some unbelievable things in Latin America, and they're even now able to help farmers to raise money and funds there, and also track grains. As you know, grains go from country to country, and about 30% of grains are wasted every time, and those grains can turn into can feed half the global population. So I would say that there's many use cases. The way I look at it is, I think real estate is important because it's the basis and it's the building block. And once you have a property on chain, you can borrow money against it. You can do all these other things, and then it unlocks a lot of other use cases. And integrating with all the different companies that we have here on the table is game changer. Having Mohan's company to be able to charge and then use your use your roof for solar panels, and then be able to share some of that electricity. Do these other things with RYU, or for selling and buying, and all of a sudden it changes everything. I feel like the first thing that should be get disrupted immediately, that is a ripoff, is Western Union. That should not exist. That company is ripping people off, charging 10% to remit your own money. It's a real ripoff, and we need to get rid of it. like
We'll talk after the summit about what kind of business to create for that. Matt, what about you? What example would you like to share?
For me, I would think more on the healthcare side, where you're more or less protecting your healthcare records and taking them with you when you visit a doctor, right? And having all of your healthcare information in one place that you control. So let's say you go to the doctor, you hand them, access to your healthcare records, and when you leave, those healthcare records come with you. Right. And then your whole entire medical history would literally be stored on the blockchain. Right. So that every doctor would know your entire medical history. And when you walked into their office, you wouldn't fill out 20 pieces of paper that I don't even know what I'm filling out half the time, to be honest with you. But it would really change everything in the healthcare industry, to be quite honest.
Yeah, there are a few companies doing that, by the way.
Great ideas. Yeah, revolutionary.
Yeah, and Mohan, you're the last one to share because we are about to go into our end note.
Yes. Thank you. I'll keep it very quick. For me, it's Decharge. That's where that's where my bet is, and I'm all in on that. And energy and mobility have this insane arc on blockchain technologies. We are seeing that happen in real world. We are seeing communities around the world. Decharge has now become a movement rather than just, like we are a movement officially. We've moved on from individual products and now we are doing large scale products. We have a community get together to pool in $150,000 to do a very large site in Maryland, DC, and then we are doing 13 more of those. So we are seeing this capital formation thing happen in front of our eyes. People who have access to electricity, a spare parking space, and local permits are coming and saying, hey, I'll host a charger and I'll help provide charging infrastructure because I'm generating energy through solar. And instead of selling it back to the grid for 2 cents, I'm selling it for 35 cents. So they're making an insane markup on that. They're making money. There's a whole ecosystem happening there. And everyone's happy, right? I mean, it goes grid to vehicle, vehicle to grid, peer-to-peer energy, renewable. So it's the whole deal. So across mobility and energy space, I think that's where I want to bet really hard. And so far, so good.
So I want to thank everyone who's been on this panel. I don't think that people who are watching understand the time zone differences that all of you and that you are facing. We have, India, we have, I think, Dubai or UAE, we have Japan, we have the EU, we have the United States as well. So I definitely want to thank all of you for hopping on. There will be many other conversations, and obviously the live links will be embedded so anyone who's watching this can also reach out to you directly. So we are about to go into our end note. Matt, before we do, did you want to make any comments or did you want to wait until we get to our end note? Are you able to unmute?
I'm going to wait till the end note, 30 seconds.
All right, in 30 seconds. Everyone, thank you so much for being
Matt, I thought you were AI for the longest time.
This is AI, brother. This is the future.
On this call, I realized that I was in the time zone. It's almost 2:30 a.m. And then I saw Caleb saying I'm from Japan. So it's like 5:30 a.m. for him.
Yeah, it is currently 5:58 a.m. here.
Thank you so much, guys. Anyway, let's go to our end note and we will talk. Thank you so much.
Thank you.
Sure. So, hi everyone. My name is Aaron Barak. I lead Shielded Technologies. We're the company building the Midnight Network. My career started actually as a software development. I spent many years in telecom and finance, built some startups, and really got into the blockchain space working with Gavin Wood at Parity on the Polkadot blockchain. And more recently, in the last couple of years, working with Charles Hoskinson at Input Output on the story of Midnight. I got to give credit here to Charles, who asked back in 2019, can a blockchain keep a secret? You think about blockchains, it's a great tool, services many things, decentralization, integrity. But one of the key challenges is that with that integrity, we have an exposure of data. and potentially sensitive data, financial information, medical records, what have you not, right? It compromises data protection. And sometimes you don't want all that disclosure to happen. And blockchain doesn't really give you a choice. Everything you put on chain is visible to everyone. So Charles asked a very simple question: can a blockchain keep a secret? And we realized this was harder to answer than just let's encrypt the data and put it on chain. Then you get a concentrated effort through research and rigor for many years until we now believe we've got the solution, and that's what Midnight brings to the market.
So
the Midnight Network is launching later this year. We already have the test network open publicly, and we've got thousands of developers already building and trying it out. Yes, the code is going to be open source. We've got auditors, the usual stuff, and we've created something that you mentioned called the Midnight Foundation to curate all that effort. Shielded Technologies, as I mentioned, is the labs or the engineering company building the technology, but it's going to be available for everybody to see and share and use. There's a mix of technologies there, including zero knowledge proofs and other capabilities that we brought together. And it's really fantastic that we're finally able to provide enterprises and businesses that want to use blockchain, but want to really have the disclosure kind of being at a selective level, kind of rational privacy, where you decide what you want to share with who, and not just being forced to one modality where everything is disclosed. Well, you said you like stories, so I'll tell you a little story. When Charles reached out to kind of me joining the Midnight Adventure, I was a little bit skeptical, and not because I didn't think highly of Charles or everything else, but I was looking at a blockchain through the prism of a potential customer, a Web 2 customer, if you will, and asking myself, can I use this technology? And I immediately identified a couple of challenges that are not addressed by blockchains today. One is privacy and disclosure. You need to have through and through privacy. I came from financial services. Nobody's going to put all their financial data on chain. It's inefficient markets. You don't want to get the front run by others, all that kind of stuff. The second thing is you've got no cost control. About what I mean is that if I build an application, a dApp, running on any blockchain that you're familiar with today, whether it's Ethereum, Solana, or anything else, you are really paying for the transactions with a token, and that token price could be volatile, right? I cannot forecast what would be the price of, let's say, Solana over the next 5 years. How could I build a business plan and know how much it's going to cost me? Who is going to invest in my company if I tell them my costs are unpredictable? It's not going to work. If two companies want to use blockchain, they want to know this thing has clear cost predictability and forecast. And the last thing is SLA. We are dependent on the public at large with economic incentives to do and operate the chain. But if a block producer, for example, decides not to include my transaction at the next block, my experience would be like a denial of service. And so we got to build mechanism and designs that mitigate those issues. And only when we do that, do I expect Web 2 companies to come on board. And the design we've built into Midnight is to address these challenges. So we can have rational privacy. We can have cost predictability and SLA, things that Web 2 businesses expect kind of as table stakes to get into the game.
No.
I'll ask you a simple question. When you take your phone and you tap on any of the dApps or any of the apps on your phone, do you ask yourself, do I know which technology this app is using, which data center it's hosted, where in the world, which database it's running? We don't. As consumers, as retailers, we don't care. It just works. And to the same degree, I think the apps, today we call them distributed apps or decentralized apps. Tomorrow, it's just apps, right? It's just applications. We as retail users, we don't care. We trust that the provider built the right technology. So really the people that are focused on building the right tools with the proper rights and freedoms and controls and security. These are the businesses. They are serving us kind of the experiences that they believe we would want to consume. Absolutely. So people that want to build on the Midnight blockchain can do so independently or combine it with other tools and other blockchains. We've actually designed our tokenomics to something we refer to as cooperative or collaborative tokenomics, meaning we allow people to pay for transactions on Midnight with other assets. So you could actually, let's say you're running on Cardano or Solana or Ethereum, you could pay for a transaction on Midnight with ETH, not just with the Midnight native token, allowing us to really nicely collaborate with that ecosystem and extend it. I'll give you a simple use case. Let's say you have a DEX on Ethereum, and that DEX does a whole bunch of transactions, but that DEX needs a kind of an attestation for the user executing that transaction to be a KYC user. But if they need a KYC kind of attestation, that could come from either a centralized kind of provider. Well, that would violate the concept of a DEX, or it could come from a decentralized network like Midnight. But imagine then that application, that DEX can pay for that attestation on Midnight with ETH. They don't need to learn about our tokenomics. They don't care. They just want the value. They could even pay for a Midnight transaction with fiat, with US dollars. We make it so that anybody on Web3 or Web2 could access this technology, could bring into their world and make it as simple as possible. I don't think Web3 has crossed the chasm. I think we are still at a very inception of the potential of blockchain. I think everybody agrees. The question is, what's going to be the tipping point? Where do we go next? What's going to change? We're seeing some change thanks to the new administration and the US government kind of thinking forward about the rails, whether it's Genius Act, Clarity Act, and et cetera, that would provide kind of the foundation from a regulatory perspective. But it's other missing elements, whether they are privacy, cost predictability, more collaboration. This industry needs to come together. We would start seeing real use cases. I'm really excited, not just about the potential of DeFi, the potential of freedom of association and commerce, where you have control and you have ownership and custody of your own data, but also things that we can really improve in the world, whether they are pharma research around new drugs or new ESG stuff that would kind of get us to a better world and a healthier world. These are things that are really exciting with what blockchain can do for the world, and I can't wait to be a part of that. And I hope that it's not just Midnight. I don't think we're going to be the only game in town. There are fantastic blockchain networks and technologies out there. I would call on all of you guys, work together, work with us. Let's help customers be successful. We're about to really change the world. It's really exciting.
I agree with you. And that's why we have these global summits, is so that way individuals can see the diversity and how the problems are being solved. So we really appreciate your being on. Thank you so much.
Thank you.
Wow, what a summit that we've had. I know that Alana, you're back on, Matt, you're on, and I know that we're waiting for Anthony to hop on as well. What are your takeaways?
Well, I want to jump in with a couple notes here, and then I got to get out of here and handle a little personal business. Can y'all hear me okay?
We can hear you fine.
Well, I wanted to say, nothing that you hear on the Blockchain Legal Institute broadcast is legal or financial advice. I got that covered. And I really wanted to kind of thank definitely Lonnie and Anthony and the Rio team for believing in the work that we're doing. We certainly believe in what y'all are doing as well, leading the way. I think that a lot of people that you spoke with and interacted with today, they sort of agreed, right? Regulation first, and kind of working with, those in leadership kind of hand in hand is going to be beneficial to the industry. And just big thank yous and amazing job that the Rio team did. And we appreciate y'all's partnership and co-producing all this. And we want to hear this fireside chat. Maybe Anthony will make it in. Otherwise, we definitely want to hear more from you, Lonnie, and
Sure.
maybe
Well,
Jeff
I'll
as well.
start until he gets in. I just wanted to say that, listening to all the panels today brings us really to a deeper question. And I think everybody, would agree that, all this, there's so much innovations that happen, so many tools, but who is it really for? Because if it's not for helping people, then what's the point? Across every panel, there was a common denominator, and everyone agreed it's time for mass adoption. And that is really refreshing, because when we started this project over 7 years ago, everybody was going one way, wanting to be anonymous, and we felt like we were the only ones going the other way, where no, it's all about privacy. And the other thing is, we talked a lot about usability, and what is the first step to that? The first step is we need interfaces that are easy to use, that are familiar and intuitive. We need interfaces that don't require education to understand. And that's exactly what we've been doing with Rio. And so this summit was really refreshing to me, because I see it's kind of a validation again to what we've created. And each piece of our ecosystem was created for simplicity, so that people don't need to understand. It's just familiar. And technology, I feel, should blend seamlessly into what people already know, right? We shouldn't have to force them to start over. And every single technology that we use today, from phones to apps to services, internet, texting, everything's instantaneous, everything's convenient. Yet for some reason with crypto and Web3, it's just so complicated. And one thing that I wanted to mention about the interview with Aaron, he spoke about transparency, redefining privacy, restoring identity, and letting users choose what's shared and what stays private. And I think that is really critical, for the next stage in Web3, because that's what Web3 is all about. It's about control, choice, and trust. So here with Rio, we've been building this, and from the very beginning. And I think that we shouldn't have to ask people to learn crypto. I think that we need to start asking them, do you want more control of your finances? Do you want more ownership of your data? Do you want inclusion and freedom in a digital world? Those are all of the things that Web3 stands for. And Web3 promised freedom, control, opportunity, but it just became too technical and too exclusive. So.
Well, I think, based upon also what you said, the underlier also is providing the individuals who can actually do this tech. So yes, you do need to have careers developed, so that way, if you want to have simplicity, that you have individuals who know how to do the tech. Because then you can make it simpler. So right now there's been a learning curve. Every time the tech changes, you have to teach the next generation as to what this new tech is. So I agree with you that as we don't necessarily want a standardization, because, but there are a lot of, like you said, a lot of different protocols, and there needs to be the ability to kind of go over these technologies in an easier way that doesn't exist right now.
Yes.
Yeah. And so like what you're doing with the Life Wallet is looking at the whole ecosystem and figuring out how do you do a plug and play, so that way it makes it more user friendly from that perspective.
Right. Yeah. What we tried to do is we tried to build something that comes to people, fits into their lives, and makes their lives simpler, rather than trying to adapt to something new. And one other thing that I wanted to mention is what we really stand for, and the reason why we're really prideful of being here in Japan. You hear us talk a lot about Japan and the integrity and the honor, and that's really shaped our project. And I'm sure you've heard about our revival campaign, Japan Revival, and this revival, and you've heard about our revival manga series, and it's all about it contains true stories about what we're going through in Rio. But the revival really represents something so much bigger for the world. It's a revival in fairness. It's a revival in gaining control over data, your people's data, your own data, privacy, value, and ownership, and trust in money, autonomy, and in human connection. Because in the end, what we're really reviving with Web3 is people.
So one last question is I know that going into 2026, you have a lot of projects on your plate, for the Rio digital family, so to speak. Where do you see the projects evolving? What's your focus into this next year?
Well, by the way, I think Anthony's trying to get in. He's saying he's not being let in.
I don't know that he is in the live link. Otherwise, I would have seen him.
Okay. Okay. Yeah, he's waiting, but maybe he's in the wrong one. Okay, so where I see this going is the release of our ecosystem. So we already launched the Life Wallet, and people are using it. We got a lot of feedback saying it's so simple, easy, and people are chatting with each other. They're able to send Rio by chat. And the reason why this was so important is, again, it eases people into crypto, into Web3, because it's something that people already know how to do, is chat. Right? So chat and then get on social media platforms. So that's what it all brings. So we rolled out our Life Wallet. We're going to be launching on Android very soon as well. And then we're getting ready with our global mall. We've got our thousands of global mall merchants that are waiting, to come on board. And our crypto ATM network, that is also rolling out very soon. We're in the final stages of, again, the regulations in Japan. Every time we think that we're ready, and the ATMs are all ready. You should see, in our office, we have offices throughout, across Japan, but one of them is in Nara, which is the original capital of Japan. And in one of the floors, it's completely just ATMs ready to go. So that's really exciting, but we're in the final stages of that, and just everything being tied together, seamlessly tied together is what we're really excited about. Oh, and then rolling out with RioPay. We're right now in beta testing with RioPay and with our grain trade partner, and then that is going to give proof of work, and then from there, then we just bring in RioPay with our Life Wallet, and then that will bring the stability, right? The stability with the payments.
Expand
because
a little
you need that
more.
with the global mall too.
Yeah, expand a little bit more on the grain, on the partnership that you have with that, because I think that that's also very important from a blockchain use perspective.
No, definitely, because with the grain, we have a partnership with a grain company in Canada, and between Canada and Japan, there's hundreds of millions of dollars that are moved all the time. But the process for the payments is very, very lengthy, difficult. There's a lot of manual processes that are involved. And so this is just this is a test that's going to allow us to create almost instantaneous payments where they won't have to be waiting for long periods of time. And so that's the goal with that. We want to improve not just grain trade, but any other industry. You know, I mean, a picture with farming, for example. You know, a farmer in Canada ships grain overseas, and traditionally, that farmer needs to wait weeks to get paid. There's paperwork, bank delays, multiple intermediaries, and lots of unnecessary costs. So with our partnership, our goal is to improve that. And through RioPay, once delivery is confirmed, payment can almost be completed instantaneously with lower fees, fewer steps, and full transparency. So for farmers, that means faster cash flow. And for buyers, they get more clarity and reliability. And for consumers, that means, you know, the food chain works so much more effectively. So yeah, we're excited to complete this beta test. That's going to be our, I'm sorry, not proof of work, proof of concept. And you know, RioPay is intended to be the settlement currency for grain trade between Canada and Japan using real world assets. And this initial trade is going to be a validation of the concept before full implementation. And of course, we're working with all the regulators too here in Japan, you know, to get this approved and later have it again integrate with the entire ecosystem. You know, but grain trade is just the first phase, and we started with grain because it's something that everybody knows about, and it's important. It's putting food on tables, you know, and we could then we could do the same thing, replicate it with other industries, from real estate, automobiles, and any product that where trust and speed matter.
So there's been a lot going on. I know we've been trying to reach Anthony. So for those that, you know, when it's a live show, it's a live show. But trust me, Anthony and you are going to be on other talk shows. So we will get him on for the end note. Matt, any last comments before we wrap up? I know that we have our March Global Summit on March 21st for those that are listening. It's going to be about TradFi, ConsumerFi, DeFi. And I know that Lonnie and Anthony will be on because of their involvement with stablecoin and the ATMs and a host of other things going on. Any last comments, Matt?
Nothing more from me other than congratulations, Jackie. Great work.
Well, same here. So Lonnie, thank you so much. Anthony, thank you so much, even though you're here with us right now in spirit.
He's actually waiting in front of his computer, just waiting to be.
I know. Unfortunately, we were trying to see where he was and we couldn't find him. So,
okay.
So unless he's able to kind of walk down the hall to.
Yes.
Able to join us for a quick second, and then we will wrap up.
You know, he's just right down the hallway. So I could just go grab him. Here he is.
Okay, awesome.
Yes. We're still live.
Okay.
And
yeah, we were trying.
I
was waiting in the green room, and I don't know why it wasn't connecting.
Maybe
you don't know. That's the joy of live TV. You know, again,
isn't that funny?
Technology.
We're in the tech space, but we don't even know how to operate freaking StreamYard.
It's okay. It's all right. So we wanted to give you the last word to share your insights as to what you've seen over the summit, because there was a lot going on, and then where you see the industry going.
Well, I really enjoyed the panel. I thought the panel was a very interesting set of different perspectives, and I want to really connect with a few on panel 1, 2, and 3. Of course, we know Jack, with Arise. He's an amazing speaker. He always has amazing insight. And I think what Jack was touching on the stable coins, I think that's gonna allow mass adoption is through the stablecoin usage. And I really feel the future looks bright for us, but it also is a little scary, as I mentioned with AI. It's a little bit scary, and we need to just, rein that wild bull in, because if not, it'll get out of control, and then we will lose. Not only is it going to be decentralized, it's going to be all over the place and decentralized, and that's what concerns me a little bit. And that's why I believe that in order for us to succeed in the blockchain space, every company that was on today, we need to communicate with the regulators and make sure that we are compliant with them, so they won't allow us to be able to innovate. Because if they don't, no matter how much innovation we have in our toolbox, if they don't allow us to proceed, then it's a moot point. And so we really need to work closely with regulators, make them understand our protocols, or whatever it is that everyone is attempting to do in the space, and collectively, I think we can grow together. But if we segregate and start fighting one another, or my chain is better than yours, or this is better than that, I think it's gonna create chaos. And so my hope and my dream is that for everyone in the space to be able to look at each other's models and see how can we work together with partnerships so that we can advance this space.
I think that's a great way to conclude this summit today, and it will launch us into our next summit, because again, our next summit is about TradFi, ConsumerFi, and DeFi. And there is a lot of overlap, because again, there's the products and services, but there's also the financial side, as you've talked about. So everyone.
Yeah, and when's the next summit?
It's March 21st.
Oh my God! That's by that time we're going to be in a whole another league in this space. The way things are advancing so quickly.
For sure, yes, it is warp speed on so many different levels. So it'll be very interesting to see the transformations between now, October, and next March. So
hopefully, remember I said this summit. You guys were supposed to be in Tokyo. So hopefully in March, maybe we can host it in Tokyo.
We'll look at that. We'll look at that for sure. Okay. That way we'll be in your time zone instead of you being in ours.
And we'll let everyone else outside. We'll go and start it at 9 a.m. in Japan time, and let everyone else abroad have to stay up till 2, 3 in the morning.
Thank you so much for doing that, by the way.
Yeah. Actually, it's time for breakfast. It's 6:30 here.
Well, we definitely have a very large breakfast for us. And thank you so much for being on and being our strategic partners and helping us with all this.
And I'd like to thank Matt, the AI agent that's online there. He looks so real. Thanks, Matt. Thanks a lot.
Yeah, thank you guys. We really truly appreciate Blockchain Legal Institute and the both of you and your teams and what you stand for.
Yeah.
We appreciate. Well, thank you. And right now we're going to do our end closing videos. Thank you so much, everyone. Have a great day.
Thank you. Bye now.
Bye.